If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about AUDNZD. AUDNZD is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out AUDNZD, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Good morning, everybody. Welcome back. Happy Thursday to you. Hope you're all doing well. Okay, we are all set. Yes, we are back taking a look at some markets here this morning. Let's see where we are in terms of how things are opening up this morning. You have stocks just slightly lower. NASDAQ down 0.4%. S&P down 0.3%. Same with the Dow. Russell's down the most, but just slightly more. International indices down a little bit. You have the DAX, the FTSE, and the Nikkei all down a good bit. Hang Seng Index slightly higher. So overall, some interesting moves here this morning. We do have oil looking like it wants that breakout that we talked about in the last few days. Oil just now above the $66 a barrel mark and testing the upper limits of this resistance point. We'll see if we can break out. We've been talking about this. This level here, and we'll see if it can get some sustained move if it can't get above this, right? The question is, can we get above there? Okay, cool. Can we actually stay above there is the question. Of course, there's a lot of geopolitical factors at play here, and nobody, not me, not anyone else here, knows for certain exactly how everything is going to play out with the whole US-Iran stuff. That being said, why can I trade something if I don't have certainty on what the geopolitical headlines are going to be? Well, you could say that about trading anything. And this is where, you know, if you just take that for a second, you internalize that, and you say, wait a second, at any moment, something crazy out of left field could happen on a stock, currency, commodity, index that I'm trading. You'll be better off. Because if you start accepting that not all of it is controllable and you don't know with certainty, you will start thinking way differently about how you trade. What's up, James? Good to see you here, man. Good morning, everybody. Thoughts on GU? Could the US invade Iran anytime soon? Yes, it could happen. I think that the oil market is telling you, we will take a look at some dollar pairs, by the way, yes. What oil is telling you right here is oil is telling you that there is a risk premium coming into the oil market, which indicates that people are a little bit thinking, oh, we may see some stuff take place in the Middle East. We don't know exactly how that will play out, but the market does not sit around and wait for knowns to be released. The market trades on rumors and expectations and possibilities and forecasts. Yesterday, I saw something on Twitter that was a map of like U.S. military jets or planes or something, and they were pretty much all moving in the general direction of the Middle East from all over the world. And so there's people, you know, kind of saying, okay, they're posturing for something big to happen. We could wake up to a headline that is, you know, something took place in the Middle East. And so, you know, we saw that, what, couple of months back. So it's not out of the question that it could happen again. And so, yeah, oil is not waiting around. It's not sitting there saying, well, let's just keep oil prices low. And then if something happens, it'll just jump. No. That's not how markets work. Markets trade on rumors. There's uncertainty about exactly how this will play out. You may see price trend all the way up here, and then nothing happens, and then oil drops back, right? That's actually a lot of the times what does happen in oil. Take a look at oil, how it has these sort of V-tops. It's because it trades off of something really big, something scary happening. And then when there's some sort of resolution, if and when that happens, it drops it right on back. And so, I don't know exactly how everything's going to play out there, but it's actually not the reason I took the oil trade in the first place. I took the oil trade. Now, it's not an easy thing to show now because EdgeFinder has only a +4 score for oil. But a couple days ago, we had a +5 reading on EdgeFinder, which gives us a bullish overall reading. Now, for new listeners or viewers, this is the asset scorecard. It essentially watches a huge collection of macroeconomic data, things like economic growth statistics. It also looks at inflation statistics. It looks at the jobs market data that's coming in. All those red folder events that you see on Forex Factory, what this software does is it takes all of that into consideration and actually builds a bias. What most traders do, I know this firsthand because I used to do it when I was, first getting into fundamentals many years ago. I would just watch like the latest news articles and I would watch like Forex Factory to see what the latest data points would be. And I would try and like do fundamentals in my head. And it was just a silly approach because in the modern era, we have wonderful tools like EdgeFinder that can actually take all of that information into consideration and automate that research part, right? So instead of, if you're a trader, your job is not to data crunch a bunch of stuff on your own and put it into a spreadsheet every day and spend 3 hours, collecting data manually. This is the modern era. We use software to do that stuff, right? So this software automatically goes and it pulls latest GDP statistics and services PMIs, consumer confidence readings, CPI. It pulls it all in and builds a bias on each of these categories and specifically how it impacts the selected symbol. So if you trade gold, you can go to the gold reading here or the NASDAQ reading or platinum or Russell. And we also do it for currency pairs under our Forex scorecard here. You can see, for example, if I select Aussie Swiss, it's giving me a comparison reading like the economic growth comparison of these two currencies, the jobs market comparison, the inflation comparison. It's looking at crowd sentiment. It's looking at institutional activity on these currencies. It's looking at technical signals. It's an all-in-one data crunching mechanism. You're a trader. Your job is not to data crunch. That's what we do here at A1 Trading. Now, I also trade, but the company that I started, I have a background in software engineering. We build tools that crunch all of this data to help us as traders to have a quick interpretation of what the data is telling us so that we can then take that and apply it to our trading. Again, if you are trying to do all of this manually yourself, you're working uphill when we can just use tools, just like you wouldn't try and chart your analysis on a piece of paper like they, believe it or not, used to do 50 years ago. If you wanted to do technical analysis, you'd have to like mark it up in a piece of paper physically, and then you could draw lines on it. Like I'm talking pencil and paper, draw candles in. That's what people used to do, right? Nobody does that anymore because software and because technology allows us as traders to have charting automated, right? Same with EdgeFinder. Our goal is to automate macro fundamental analysis to make it accessible to the average trader instead of you trying to draw it in by hand yourself like people 50 years ago with charts, right? Anyways, I mention all this because the EdgeFinder is currently on super sale right now. We are doing 45% off discounts during the live stream. If this is something that you're interested in taking advantage of, we'll drop a link here in the live stream chat. Again, our team here is behind the scenes ready to get you access to it. If you need a payment plan set up, if you need the discount information shared with you, if you just need the link to check it out, etc., we'll drop a link here in the live stream chat to where you can speak directly to a member of our support staff, and they can set you up with some information about the discount that we're doing this week. So with that said, what am I doing with oil? I'm just going to keep trailing it. So I'm going to also drop that link here. Chat with us. There it is. Okay. Boom. So send us a message. Our support team is there if you need any help with any of that stuff. So if the Strait of Hormuz was closed, what would happen to oil prices because of the conflict? If the conflict continues to escalate, oil prices continue to go up. Same with gold and silver, by the way, right? If and that's kind of being confirmed here. Oil is really making a sharp move, though. It's really interesting how oil is charging ahead here. And I think that this makes sense because if you remember, we talked about this. I know people want to look at gold and silver. I will look at it too. I'm fixated on this because oil is, to me, one that I see a lot of potential in right now. So the trend looks good. Seasonality looks good. Institutions are long oil. We know this for a while. They've been pretty long oil. GDP growth, strong. PMIs, strong, right? Retail sales, not so hot. Consumer confidence, not so hot. CPI came in low. That's good for oil. Lower interest rates. 2-year yields moving lower. That's good. Lower interest rates. Non-farm payroll was strong. Unemployment rate. So we have some statistics here recently that are suggesting, okay, the macro backdrop for the demand of oil remains strong, and you have geopolitical tensions that are on the rise. So I'm just interested in this chart so much right now because I'm in a trade currently. I'm watching to see how this candle closes today. If you get a nice solid closure above this area, what will I do? Well, I'll take this initial stop loss, or I should say this trimmed stop loss. I initially had a stop here. I trimmed my stop loss here. My plan would be to trail it somewhere into profit. So that might be what I get a chance to do today, depending on how oil is super volatile though. So you could have this candle close like this today as well. It's very, very volatile. So I'm just watching and letting price action guide me on what to do with this trade next. Again, I do think that if you get a nice solid closure above this area, you very well could be looking at, oil making that next move higher up into the 70 area. Depends. It is largely dependent on this geopolitical situation. So far, the stock market's a little softer here this morning. Take a look at the NAS. NAS giving back some of those gains from yesterday, or I should say it's just choppy, man. The NAS is so choppy. We've been seeing these up, down, up, down, up, down, up, down moves for a couple months now. It's been a difficult environment to trade if you've been trying to trade, momentum setups. I fortunately have kind of stepped to the side on indices for probably a month and a half now, just because, again, EdgeFinder's been giving me just flat reads on S&P, and that is in a low key, right? Like, although this has been a very choppy, boring market for S&P, neutral readings within EdgeFinder for a while have been a great kind of hedge, right? It's almost been like, hey, just staying out of the way. Okay, unemployment claims just came out. Let's see how that's impacting markets. We do see, well, let's see what the number was. 206K, and that was lower than expected by a good bit here. Maybe we can bring in Chris Pulver here to the conversation as well, have him join in on this. So if we take a look at unemployment claims, we got 206K, 206 compared to 223 expected. That is really interesting. Chris, how you doing, man?
Good. What's up?
Not a lot. Doing well. Hey, so yesterday I made a post, and I actually, it's starting to become more and more interesting of a conversation. We've been in this like paradigm for a while of like the Fed's next move is going to be to cut interest rates. The Fed meeting minutes actually were pretty interesting yesterday, where there were some comments that were actually slightly more hawkish in the sense that they felt that the labor market was showing stabilization signs, but inflation, if it continues to stay sticky, there's not an impossibility that we could be discussing interest rate hikes. I'm paraphrasing there, and I don't think that is like necessarily a high probability thing that the market's thinking, oh, we're going to get hikes. But you have seen a very interesting, slight nuanced shift in some of the data coming in. We have seen stronger than expected jobs data. Today's unemployment claims is more evidence of that, with 206,000 jobs or unemployment claims compared to 223 expected. That's also down here. We've seen jobs data firming up here recently. And yes, you have seen inflation improve. But the question is, is that sustainable? Is that going to stay that way? Anyways, I just think it's kind of interesting because there's that slight possibility. I don't give it a lot of credence, but it could be the case that if inflation ticks up, we could very quickly go at least from, a foregone conclusion that the next move is going to be an interest rate cut to, we don't know, maybe we're at the neutral rate right now.
Yeah, the story of the Fed and even the labor market, I think that what we had with non-farm payroll for the month of February is probably going to be adjusted and revised lower. I would say that a lot of the hiring that we saw with that 130K print was seasonal, so probably seasonal adjusted employment. So I wouldn't be surprised if that is revised down to like 30, 40, 50K, which could make March's non-farm print pretty volatile, showing that like, oh boy, here we go again, weakness in the labor market. So I'm taking all the labor stuff right now with a grain of salt. Obviously, the shutdown last fall and a brief shutdown, this year, in certain areas. I mean, it's hard to know what the actual data is. The inflation stuff, I don't know what's going to start like kind of reflating the markets, except for what I know you're taking a trade in oil. That's about the only thing I think jump starts the kind of sticky inflation narrative again. We've had a monster decline in inflation from from Truflation's readings. What was our print? 2.4 was our print for headline CPI. Yeah. And I mean, either we're about to see just massive prints lower over the next coming months with the the CPI data, or this is just so far of a disconnect that we don't really know which is right. I would imagine more of the third party stuff is right. This is probably what's happening in the background. I mean, labor market wise, I like the fact that unemployment rates are low. I still think in the U.S., if you want a job, you can have a job. We're not quite at the true AI disruption yet. But I just did a segment yesterday talking through. I mean, next week we have NVIDIA earnings, right? All the stuff that's been happening with the aggressive dispersion trade and the sector rotation. I mean, commodities are doing pretty well. We talked about DBC yesterday on the show. Oil is obviously having a pretty good run. I think that things are starting to look a little bit more escalated between Iran, U.S., maybe Israel, like Middle Eastern hotspot again, or I guess Middle East hotspot again. I think you just have to watch oil. If oil is going to flare up, that could be kind of that poke in the inflation bear again. But Nick, I mean, what do you think has to happen for oil? Do we have to have a surge above like $70, and then what? Does it go higher? Does it hit 70, become inefficient, and then get hit right back down? I mean, we know how kind of supply and demand dominates the theme of oil. In fact, I mean, for your bullish target, do you actually are you looking to trail out now that you're bullish or in long and positive, or do you actually have a price target on this?
Yeah, so I'm just going to trail stops on it. That's typically, and what I'm really playing for too, Chris, is to your point about what gets oil to break, truly move higher. It's almost always, something geopolitical that it blows out, right? And I don't trade in the sense that I'm trying to make that call of when that's going to happen. I know there's a lot of people who try and make that. They try and play that game of like, U.S. Iran's going to blow out and something's going to happen and Russia's going to. And I don't play that prediction game to that extent. Really, the uptick in jobs data, Chris, that was kind of a big chunk of the reason why, I said, hey, cool inflation, jobs data improving, uncertainty in the Middle East. It's worth a stab. I'll put a tight stop on it. And so far it's worked well. I don't know where it goes. I think you've got a resistance level here that we've talked about a couple days now, getting tested here. And if this does break, then I think we just say zone to zone wise, could we see that move up to 70? Possibly. It could get there in a hurry if there's some kind of geopolitical headline with it. But I think also another factor that we can't just ignore is price action is showing some different signs than it has for a while. Every single gap higher or move higher for months on oil was just getting faded into. And now, at least for now, you have signs that buyers are actually stepping up and buying each time it dips. Sure. I think that this also could coincide with our theory yesterday of maybe a stronger dollar. We know it's not one-to-one by any means, but oil and dollar can sometimes move together because, as you just described, if that inflation rate is going to go up, one of the most volatile components to the CPI or to inflation globally is, of course, energy costs. So yeah, it's the question of, is it the chicken or the egg that comes first, right? Is oil going to go up and that's going to cause inflation, or is oil going to go up because inflation is sticky in other ways? Difficult to call, but for me, it's a trade and I'll be trailing stops on it.
Sure. I mean, in this situation, it seems like it's going to be oil prices that get driven first, and then we see inflation maybe pop up after, just because it looks like the pace of oil going up is much faster. And it's been a while. It's been a while since we've actually seen, you know, oil flare up like this. And in fact, on that CL trade that I put in yesterday, I think I'm going to either adjust it or, yeah, I think I'm going to adjust it. So I had a 69 by 70 on the call side. I think I'm going to adjust it up to like a 70, maybe a 77 by 78. I'm just going to try to look left on the chart and see if that last flare up that we saw back in that'll have been June of 2025. I'll adjust it there. So I'm going to make a quick adjustment on that trade for CL, because I don't think that 70 is necessarily going to be the best top. So we're trading around 30 cents right now. Let me make this. So that's I have to adjust it here. So March 17th. All right, so I'll cancel that. All right, let's try this one again. March 17th, weekly. What are the charts you want to look at today, Nick?
Yeah, so I was also looking at, from an index perspective, if I'm looking at S&P 500 here, still just stuck in a range. I did a video on my second YouTube channel yesterday just talking about a couple of software stocks that I'm watching. I'm looking to buy the dip on a couple individual names. I like Intuit. It's gotten beaten down hard here, so I'm watching some individual stocks within the software world. I'm also watching CRM, Salesforce. I've actually sold cash secured puts on this one down at the 175 strike price. Those are, you know, in the red here for the time being, but I actually wouldn't mind getting a little bit of assignment. I know we've talked about this, Chris, but I've been pretty cash heavy and sitting on some stuff, so I'm perfectly fine with. And then I also I did a little Microsoft play here. This is a Chris Pulver special. I mean, this is a low delta out of the money April lows on Microsoft. So that's the Chris Pulver special right there. Collected some decent premium on it. And hey, you know, I literally, as I said this, I said, I hope this gets assigned. Like, give me some Microsoft down at 345, and I feel perfectly fine with establishing a position there and, you know, playing with that. So I'm watching a couple individual software stocks. You know, it's pretty rare, and I no financial advice here. It's pretty rare that you get, you know, Microsoft down almost 30% from its highs in a bull market. And so when I look at that, I say, okay, I think the risk reward looks decent. And if it snaps down to that April low, which I think it could, you know, my thought process on this software stuff is that short term, I still think it is bearish, and I think it's a narrative that actually can grip the markets and hold it, you know, down. I think that this is not going to be. I've given my theory yesterday and to you, Chris, that the April sell-off of last year was something that the Trump administration kind of was at the steering wheel doing, you know, and at the same time was able to take that away, and they did, right? So they had that option the whole time, you know, with, hey, we can soften up the negotiations. Once we get something that we want out of it, we can soften up the negotiations. That's what happened, right? We saw it, you know, that apex moment of the Liberation Day stuff. That was the bottom where they turned things around because they had the control to do so. AI narrative stuff, if that does grip the market with more fear, I'm not saying that it does, but if it does, that's not something that we can just on a snap, on a turn, on a dime by a decision-making process, see this thing reverse higher. So in the short run, I still have my concerns about that narrative causing some rotation, some selling, some, you know, pain in the short run. But long term, I think that there are some great companies that could go on sale in that dynamic, and I'll probably buy the dip on some names that I'm watching. That's my theory on it. What do you think? Do you feel the same? Do you think software is overdone in the short run, or do you think that the narrative could maybe just form into somewhere else?
I think in the short run, yes. I think that, you know, IGV and some of those darling software stocks will probably get a bid. In fact, that's probably the one thing that's needed to kind of save this current chop fest is, you know, we have NVIDIA next week. If IGV and software companies get a bid, let me just look at IGV here. I mean, we're down 30%, right, on this ETF.
Yep.
So, I mean, catching a bid here in the near term. I mean, what I don't love is we are getting, you know, prices below the 200-day moving average. I think that a pullback, let's say the pullback is somewhere here. We pull back, just take a fib, pull back into maybe like the 30 to 38% zone. I mean, that's really the next spot to watch, because if this area also acts as what was support for a moment becomes resistance, we come back down and test the lows. I mean, anything software wise in the near term would be catch a bid, grab some profit, and lower the exposure once again. I mean, we just don't know how the market's going to continue to price in the disruption factor of AI. I mean, a one-time disruption is fine, but like I don't think the rotation is that aggressive right away. Where it's like, hey, we'll beat it up, we'll flush stocks down by 50%, and they're going to come like roaring back.
Right.
I mean, all the good stuff, Nick, has been kind of priced in. I mean, the big beautiful bill, all the good stuff's been priced in. The rate cuts is supposed to have 2 this year. It's been priced in. Market's going to all-time highs, almost getting to 20% for the third year in a row. It was there at 18+% last year, right, with dividends and everything. I think with dividends at almost 20% for the S&P. So, I mean, in a way, right now, what I'm looking at is I am watching just really the NASDAQ. Let me see if I can find. So we have a couple other earnings prints this week. I think Carvana is going to be a good one today. Carvana's down to the downside. I did a bear put spread on that. Let me try to find.
I got to show you something on that. What you just said about earnings.
Yeah.
Little stock box plug here.
Do it.
Check this out. So this is something we are still tweaking and refining, but this is our earnings calendar that we've been working on. Now, I know there's earnings calendars all over the place, but what I wanted to specifically see is we're still doing some data mining and some research on this, but I wanted to know the average one-day actual move, not the implied volatility, but the actual move that typically takes place. Because, you know, if you're an options player or trader, you might, you know, want to sell the strangles or do a straddle, whatever you might choose to do on that if you want to play the options move. Or if you're long or short calls, puts, or long calls, long puts, etc., you may want to know generally where it actually lands. So what this does is it looks at, like, for example, a Walmart, and it will, over time, populate the average one-day earnings move 24 hours after the earnings are released. So just kind of a fun little plug, but that's something that we're working on. But yes, to your point, we have a couple earnings reports that could be interesting coming out here in the next few days.
For sure. The earnings reports. So we had Carvana last night. We have Walmart this morning, which really right now is not a big pre-market mover. Deere and Company, which the big bonus for them was Caterpillar and John Deere. Like any equipment that you pull in, you can write it off, all of it. All the appreciation can be written off in year one, so that's a big boost for them. Both Deere and Company and Caterpillar have been like really, really good stocks last year. Some of these, so I'm looking at a lot of these, like which ones are in the NASDAQ. I think that's what's probably the most volatile. I'm not necessarily bearish on the NASDAQ. I'm just thinking like tech right now, software right now, probably the most volatile. And I kind of want to do some of those two-sided trades where if I just priced out the expected move and then do like a combo debit spread, I can hopefully get enough volatility around an earnings print that we will get a net profit. So a lot of times I'll do a trade where, let's say the spread is, you know, $5 wide, and I can do a bullish spread and a bearish spread and pay like $230, $220. I can still make 100% return on my trade as long as one side of my trade wins. That to me is sometimes a pretty fun way to play earnings, just because all I need is price to do something, and typically earnings is going to be that catalyst. So Walmart this morning, Deere and Company, Klarna for the buy now pay later. That's also a little sign for the health of consumer. I think a lot of people have the bottom of the K concerns that like Klarna and trying to think Affirm and some of the other companies that are doing the buy now pay later stuff are just, you're starting to get like a subprime, you know, buildup of credit essentially, and that could be a credit risk. That's kind of it for the morning. I might look at some trades this afternoon. Transocean, Newmont Mining, so that's in the gold and silver space, even though it's sold down a little bit. Texas Roadhouse, not bad. Maybe like Darden Restaurant style. And then that's probably it for the week. But one thing I want to look at for, let's go. Here's Walmart. So Walmart's up just a tiny bit. I've got a 130 by 127.50 put spread. That's hopefully going to look pretty solid. If we go to Carvana had a pretty decent drop lower at 338. I've got like a 370, 377 by 375 bear put spread. So I might be looking for profit this morning. Looking at the, let's see, Deere and Company. I mean, I do expect a pullback in this, but look, they just announced earnings are up $30.
Yep.
Right. Like, I mean, things that are ripping like this, I think that the market loves them so much. It's like, why not just pump them higher? Caterpillar, same type of thing. It's hard to stop, you know, that type of run, but man, I got to change this fib. This is kind of my, PSA for anything in 2026, because 2025 had such incredible runs from Liberation Day. Right now it's like Caterpillar. Do we pull back? It's still a great stock, but do we pull back to 680? Do we pull back to 630? Do we pull back to 600? As a somebody that wants to be buying a dip on a stock like this, this isn't super exciting, but it got a lot more volatile in the last 12 months, when now the beta is up over 106, when I don't think it was really ever that high. Anyway, if we get dips, software stuff has already come down into this level, or worse. Here's Oracle, right?
Yep.
That's the one that probably concerns me. So, to your point on like software in the near term, it's certainly beat up. Look at the sector rotation. I think the energy stocks, if they pause, we could see like a short-term bid in tech. All this is kind of going back to, does the market have what it takes to give us a breakout? In the weekly time frame, are we really going anywhere? Let's drag this over here. Are we really going anywhere? So if we get a clear weekly break, I'm just going to trade the breakout. So to the highs, to the lows, NASDAQ, kind of the same thing. You can box in the NDX. I think there's maybe that double top look on NDX. So that this is why the NASDAQ to me is more vulnerable. But I will give the market, I think I've said this before, I'll give the market a lot of credit for having this like crazy dispersion, aggressive rotation, and not necessarily disrupting the indexes. Part of me is still like a bit more bullish than I am bearish. I just don't know, if we break to the downside, why? Are we breaking because of a war now? Are we breaking because of, earnings or earnings compression? Earnings are, for the most part, still pretty solid.
Yeah. No, I think it's definitely an interesting thing to watch, and that price action on NASDAQ, as you kind of pointed out, looking at it on the daily time frame, we went from this, as you pointed out, the April recovery, shot into more than a recovery, turned into just an all-out rally, and then now we've really gone sideways. We were talking about trading at same levels that we were as far back as September of last year.
Yeah.
So the NASDAQ has been interesting, and to your point about out the gate here, January, February, we are seeing some very different looking charts than 2025. And I think that, for me as a momentum trader, now obviously I'm doing the software stuff, but that's not necessarily a momentum trade. That's, for me, it's like, okay, I think there may be some good companies that are on sale that are sort of like buy them and stow them away type trades or
right.
Holds. But in terms of active trading, to me, I'm actually more interested in things like the Russell and things that are working. I'd rather be, from a trade perspective, from a momentum trader's perspective, I like industrials and I like energy, and I like the things that are already trending higher. It's like you just pointed out pretty well with like John Deere, right? Something that's working right now. There's a good chance to your idea of, let's say we do get a pullback. I'm pretty sure, I know your style decently well, you'd be watching that for a possible chance to get in on a discount kind of thing. Same here, right? Because I think that trade makes a lot of sense. That out of the gate winner, if it cools off and takes a break for a little bit, it may give a chance for, kind of that second follow through move in the second half of this year. We've seen that so many times. And you talked about that the other day. I thought it was a good point, is like, that momentum trade can really carry through. Like the winners out of the gate, January, February, March, can come back and kind of follow through into the end of the year. And maybe that's the tax structuring stuff, right? People don't want to close out on, unrealized gains and have to like pay taxes on it. Maybe that's a little bit of the factor there. But I think it's also the window dressing that goes on, people wanting to say, hey, yeah, we caught the industrials rally this year, if that's gonna be the story. So it's an interesting one for sure. I also wanted to just take a quick look at the dollar. We've been covering it a lot here recently on the channel. Dollar index is making a run here to test this resistance point. So unemployment claims this morning did come out stronger than expected. Could that be the catalyst to try and get us above this resistance point? This is a really clear technical resistance area where we did find previously a very V-shaped sort of move higher. We ultimately did come back and fail below this level. Then we had the whole Kevin Warsh as the new Fed chair. That dynamic caused a a surge in the dollar, we are now back up to that same spot. So the question becomes, can we get above this 98 level and close with some decision? I would go ahead and say, just my personal opinion from a technical perspective, if you get this type of candle closing above this 98 area, I would say there's a good chance that dollar index may actually be bottoming on a longer term scale here at the weekly chart. Take a look at that weekly. You have a major level of support right around this 97, 96 range that seems to be, at least for now, holding. That being said, if you get something different, if you get inflation cooling or jobs data starts to really materially weaken, something like that, that rolls us over, that could be a catalyst that gets us through the lows. But for now, in my personal opinion, I think there is some strength here from the bulls around this area, and I wouldn't be surprised if we do actually make a move back up to retest some of the upper limits of this range. Again, part of the big drop that we saw last year was all of the tariff uncertainty, the trade war uncertainty. If you think that that stuff is going to flare up and worsen and continue to make other countries more worried about working with the U.S., then maybe you're a little bit more hesitant, more bearish on the dollar. But for me, I think that a lot of that Trump administration probably doesn't want to repeat that and re-bring that into the conversation. Although, to be fair, they've repeated it a couple of times here. They did in the first term, they did in the second one. So who knows? Maybe that's not done. But my opinion, I think the dollar index does have a little bit more upside here with some strengthening jobs numbers here recently. So we'll see how that plays out.
Yeah, I agree. I think that was my trade. Once we had the kind of the third test of the let's say 96.50 lows on the DXY, I was looking to get long. That little bounce we saw back here at 96, 96.60, 96.70, same thing. Low risk, high reward type trade. I like the move back to 100. That at least gives you a solid reward to risk right now in dollar flows. I don't know if dollar strength is going to equate to weakness in the markets. Typically a dollar strong move is going to be like risk off, but we're so stuck right now that you got to wonder, like, what seasonality wise, like what is the breaking point? Like, does it require a catalyst to see markets break out, or is it just, are the markets looking for permission to have a reason to go higher or lower? It's like, I think it's either a catalyst that breaks support, or it's going to be, kind of permission and grind of like, oh, NVIDIA is fantastic, right? And then software gets a bid, and then Bitcoin gets a bid. It's like risk appetite just kind of flows back in, and we break 7,000 with a little bit of surge. So that's just what I'm watching. I think that actually one trade I wanted to look at, and I was going to toss this out to you in Discord. I sent you a couple things on some earnings stuff for Stockbox as well, and we can maybe chat about that. But let's go SPY. We're going to see the VIX up into the 20s again, I believe. Part of me, so I've been doing a lot of like income style trading on the S&P and the Qs when the VIX is over 20. So today looks like one of those mornings. If I go out to, let's say, December, and obviously the market's not open yet, but this is going to be close. I mean, let's say that I do, I don't know, I could do like a 685, 675. So this is $1,000 profit trap. All right. And in addition to this, so I buy the 685, sell the 675. So if price just stays here and stays sideways or reverts a little bit, let's go over the next. I don't need to go that far out. Obviously, that's not the trade I wanted. Let's go end of April. This might be a little bit cheaper actually. Yeah, so $3 to make 10, it still gives me a decent asymmetry. That's $1,000 profit trap. Now, in addition to that, do I get strikes down? Ah, fudge. I don't get strikes low enough in April. That sucks. Try April 17th. There we go. We can go strikes down. All right. So maybe just maybe, Nick, we could do like a 675, 665. That's $1,000 profit trap. Now, could I finance this? I'm gonna have to put now. I've got to sell a lot of puts to do that. What I was gonna try to do is set us up for like $1,000 profit trap, but price is just choppy. Give us a $500 to $1,000 profit trap, and then also sell a 57-day out of the money put that's like we're gonna make some money there. Now I could do this from a delta standpoint and say, well, there's no way this thing's gonna drop to I don't know, 650 as an example. So I could just set the trade up here. Sorry, I'm 675. 665 and then do a 650. So I could take this trade, which means I would take the assignment at 650, but I get $562 with $1,000 profit trap. So if I'm comfortable, like, owning some SPY, repairing some SPY.
Mm-hmm.
I mean, that's not a bad trade. It's like that's a fairly high probability that we would just stay in this chop, maybe go 7,000 plus, and there's a $560 trade. But if I'm assigned, you got to take the assignment and repair it, because this is not a trade I'd set up to lose on. This would be a trade that if I'm getting assignment, I'm going to repair it. I'm going to sell covered calls, take my shares, and flip it for a couple of bucks. So let me play around with this for a little bit. That would be, let's go 50 wide here.
Yeah,
that's still not a bad trade. That's not a bad trade, man.
Let me see if I can, while you play around with that, Chris, I'm going to just try and explain to some of the people who are maybe newer to options. You have to understand, Chris is a seasoned options pro. He's been doing this for a very long time. Basically, what he's doing is, instead of just buying shares or selling shares of SPY, which is an ETF that tracks the S&P 500, he's looking at doing things where essentially you can buy calls and puts in the market, where you buy a call if you think the market's going to go up, and you set your strike price of where you think it's going to go to by a certain date. Or you can buy a put thinking you think it's going to go down to a certain point by a certain date. And it's like a bet, right? If you hit that bet, you get a big payout. Well, you can also sell those bets. It's a two-way street in the financial markets. In the options market, you can actually be on the sell side of that. So you can sell, someone else. Let's say you're looking at SPY, which is an ETF that tracks the S&P 500. And let's say you think that there could be some downside, and you think that maybe we're going to go sideways, but you are kind of willing to say, I don't think it's going to go as far down as this level here, like 650, right? Let's call it 650. 650, you may choose to sell a put. So someone else thinks that the stock market's going to drop like a rock in the next 1 month. They're making that big bet that they think the stock market's going to crash, or have some ginormous move lower. And what you may choose to do is to sell that bet, sell that put to a person. You collect an income, you collect a premium for doing that. If you go to the casino and you bet on something, you have to pay the house a little bit of spread. Well, when you play the options market on the sell side, you essentially get to play the house, the casino. You're offering that bet to other people. And so you can kind of build all sorts of things. And there's many, many strategies that you can get very complex on. Chris does a wonderful job within our Discord VIP group of sharing all of his, kind of different nuanced trade ideas and things that he's doing with options, and he explains them really well. So if that's something that you're interested in, the Pulver Alerts may be a service that you want to check out. I've learned a lot of stuff with options just listening to Chris talk, and we've talked about it for years together at this point. So, it's been great stuff. So Chris, I know we're about to be out of time here, so we'll throw over the show to our next host. Thank you for coming on as always, and we'll see you on the next one, man.
Okay, see you tomorrow. Thanks.
See ya. Hey, and like I said, guys, if you're interested in the Pulver Alert service or access to my trade alerts, etc., we have a Discord VIP group where Chris and I, we've been trading for years. We have a couple other guys in there as well. If that's something that you're interested in joining, scan the QR code on the screen right now, or if you want to set up VIP access, if you want to get access to those trade alerts, then consider joining us by sending us a direct message in our live chat here. We'll drop a link to where you can speak directly to a member of our support team. Remember also that EdgeFinder is currently 45% off for live stream viewers. If you don't have a copy of our tools and would like to start scanning macroeconomic data as well as COT data, retail crowd sentiment, etc., and kind of pulling it all together into one singular dashboard, take advantage of the 45% off sale that we're doing right now by sending us a direct message that you see on the screen right here, just in the live stream chat. Click that link and you'll be connected to a member of our team. Up next, we've got Miko Audu coming on to the stream and taking over for a little bit. Stay tuned. He's up just after this.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Okay, what's up people? Hope everyone is doing well. Glad to be back. So as always, bunch of markets to get through, particularly focused on FX indices. Of course, if you do have any other requests, feel free to drop it in the chat. More than happy to take a look. If there's a particular time frame as well, let me know. I'm more than happy to take a look at different time frames, intraday or higher as well. But I'll start with the USD side of things, particularly in FX. And yeah, I'm not the biggest fan of price action. That's essentially what I said last week when I was on the stream. And not much has changed essentially. A lot of pairs very range bound or in ascending or descending channels. I'm not really seeing a lot of momentum or sustained trend. It's more kind of price just fluctuating between levels. So essentially, if you're looking for opportunities, I'll be focusing more on short-term, more mean reversion opportunities rather than purely trend following or momentum following, because there just isn't any. I mean, if you take a look at the DXY, very, very flat market, very, very flat. We spoke about this level here last week. We said this could be an interesting area depending if price breaks it or respects it. And as we can see in hindsight, price did essentially respect that level support, which has formed since July 2025. We rejected that, and now we're looking pretty bullish. So where's the opportunity? Well, the opportunity would be in these areas. Excuse me. Now that price has had a good reaction off that level, we're now coming to more intermediate, more minor areas of resistance, supply, where we could see some reactions, but I wouldn't be looking to hold a trade for days or weeks, because there is no real edge here. There's no real imbalance between buyers and sellers. Everything is fairly equal. So I wouldn't want to be in a trade for too long, because I can't really rely on a certain participant being dominant in the market. Buyers and sellers are doing a pretty equal job right now. So as we come back to highs here, these could be good selling points, but I would keep it intraday short-term opportunities. We've got some supply areas up there, etc. And again, we're trading in a range as well. So added that on top, it's just a very noisy situation. Preferably if you're looking for momentum plays, trend following plays, especially from a swing trading point of view, I would avoid really trading USD for now. I mean, there are some better pair. Dollar CHF has been trending relatively well, has been pushing down, but even for this one, I'd wait for some pullbacks. We've had a really expansive move recently. This move here was quite aggressive. I would want price to retrace and find some higher prices before looking for continuation. So I'll be patient for that. Looking at euro dollar, this one has been a slight uptrend. This is what I would consider a nice ascending channel, equal highs and equal lows relative to the channel, but of course steady higher highs and higher lows. But again, where we're trading, not really in any area of significance. I wouldn't really be looking for opportunities in these areas. If I am, it's going to be very short term. At the moment, it looks like we're breaking through some support on the 4-hour chart, which was in play a couple of weeks ago. We're coming back to retest that. At the moment, we're breaking through, but of course, things can change. So I'm just not seeing really clear opportunities. And again, opportunities come from the market conditions. If the conditions are ripe, opportunities will follow. If the conditions are not ripe, well, opportunities are not going to be ripe either. So I'm not seeing much there on USD pairs. Pound USD, I'm not seeing much there either. Aussie dollar, I'm not a big fan of either. New Zealand dollar, we're seeing a lot of momentum there as well, but again, I'm not a big fan of the price action. What I do like, some of the indices, especially if we come a little bit deeper. I've talked about this last week as well. The S&P 500, we've got a few key areas which I'm interested to see how we react at. I'm looking at 6,700 and 6,500. At the moment, the S&P is very, very flat. Arguably, it's a consolidation. Market's made a few attempts to try and make some new highs, each failing. So we're not going to treat the market like we're in this scenario, because we're not. We're going to treat it a bit more neutral and a bit more, can we buy low enough? Can we position ourselves where the value is? And that's at the extremes, where price is struggling to break through. These areas and these areas, excuse me, is where I do see that value. And of course, we could break through those levels and we could discuss levels further down as well. But those are the areas I see value. Anywhere inside here, I think is just very, very tricky to find opportunities, even if you're very intraday and you're looking for very short-term moves. It's just very, very random. So I don't see much opportunity now, but I do see opportunity at these levels. So I'm being patient, waiting for price to see if you can push around the 67.20 area, 6,500, and US30 had a lot of my attention this week, but it's not really playing ball right now. We've got resistance across the board here. I was looking to see if we can get a bounce on this level. Well, actually a bounce last week. We broke below. Then I was going to see if this week we can reclaim that level and hopefully find some opportunities on a retest. That didn't happen either. I mean, we tried to, but it looks like the market's struggling a lot. So US30, I'm still quite bullish. In fact, out of the major US indices, I would say US30 is probably the cleaner one. We do still have a relatively nice trend. NAS has been quite flat. S&P is quite flat. So in terms of momentum and just pure trend conditions, US30 still looks relatively clean. It's just how we're engaging with this level is not a good sign. You can see price was firing a lot of wicks into this level. We broke through quite convincingly. Then we broke back below pretty convincingly as well. And now that's flipped to resistance. So unless I'm seeing price reclaim that level with some conviction, I would expect to see some downside now for US30. And the next areas of value would be more so in this region, 48,600, 48,700. So I'm looking to see if we can pick up some longs for the indices a bit deeper. Same thing for NAS. I'm looking at this one as well. Basically a range at the moment. This area looks pretty valuable to me. I want to see how price reacts at those levels. So it's pretty much the same idea. Trend staggering. Let's see if we can pick up some longs at deeper prices, based if we can see some evidence of price, of course, respecting those areas. Of course, drop any recommendations in the chat. I'll be more than happy to take a look through them. We can take a look at gold. I'm seeing a lot of gold recommendations. We'll go through pound USD as well. We can take a look at dollar yen too. Okay, so I'll go through gold first. So gold, I'm pretty neutral. I'm pretty boring to them, just saying everything's pretty neutral. But it's the case. You know, trading's not always going to be exciting every week. Some weeks are just going to be very, very flat, and your job is to kind of react to that, or not react to that actually, and stay put. But yeah, gold's a market I'll be keeping an eye on, because of course we had the crazy sell-off a few weeks ago, and my thought process has been, okay, we've had this massive drop. Is this a change in regime? Is the market changing in its bull cycle? Is this to signify the bull cycle's over, or is this just like a very volatile pullback and potentially the market's going to drift back to highs again? As price continues, I'm not so much expecting us to just drift back to highs, because I would expect us to do that already, especially when we have these very volatile moves. If the market is just going to drift back to highs, normally it does it pretty quickly afterwards. It doesn't normally spend its time and consolidate, fail at highs. Normally this is a sign that, okay, things are changing. But again, I wouldn't be looking for any long-term plays for gold. No long-term shorts, no long-term longs just yet from a trading standpoint. I'll just be looking to see if we can find some short-term opportunities back at highs. This is a critical level, 50.89. Price rejected very well. That's where my focus would be. If we are going to break through this, then I'll start to be interested again for some longs. But I need to see some conviction. I need to see some higher lows and higher highs consistently forming, if that's the case. If not, I can only see opportunities like this for gold. Maybe even back here we could look at some short-term buys as well. So not bullish anymore for gold at the moment. Looking at where the value is, which is at resistance, which we respected very well, I'll be looking at some short-term sell opportunities. At the moment, I would say we're kind of very rage bound, so I would avoid doing anything in here. Very, very noisy. Just not really trading at any area of significance. But should we push higher, that's a different discussion. I think that could be that that could be a smart area to base a trade around. So gold, I'm being very careful with bias and with entries as well. Neutral at the moment. The only opportunity I see is short term, just taking advantage of where prices are reacting. That's kind of how I would keep it for gold for now until proven otherwise. In terms of pound USD, this one's looking pretty bearish. Yeah, it's pretty much doing what the DXY is doing, which is forming a consolidation and respecting the boundaries of that consolidation. We respect to the highs pretty well, respect to lows pretty well, and since then we're kind of trading in the middle at the moment now. So with pound USD, again, in terms of swing, because I can talk about it from a different perspective, swing versus day trading. From a swing perspective, I wouldn't be looking to find any positions now, because again, when you're looking at swing trading, it's all about where you're positioned relative to the market. If you're in a range, positioning yourself for the middle is fundamentally quite flawed, unless you have a very specific style around that. But from a day trading perspective, you can take advantage of those small micro moves within the day, within the week, and take your profit and run. So what I do like about pound USD is where we're moving into. This was a pretty interesting area. It gave us a very, very aggressive move to the upside. So us coming back into this area is an area of value, just not a very, very significant one. Of course, in a range, these are going to be your more significant areas. They're the parameters of the range. If price breaks out of those parameters, well, we potentially got a breakout. We potentially got a new trend forming. So those are really where the focus lies in terms of higher time frame buys. In terms of shorter time frame opportunities, I like this area, big demand zone. We're coming to the zone with some force. Provided we slow down and show some rejection, there could be some short-term buys. I wouldn't be looking for this. I would just be saying, okay, there's a realistic chance we could see some temporary upside. Maybe the market continues down. Maybe we consolidate. Maybe we push up. In my eyes, each of those probabilities are quite equal. But what could be a strong probability is if we do see price struggle here and then a temporary recovery. Now that could be a nice opportunity. So yeah, for pound USD, I don't see much long term, but short term, I think there's some opportunities there as well. Dollar yen has not been my favorite yen pair recently. I just don't like how it's moving. It's quite weird. We've got significant resistance above us. This is the weekly chart. We've got significant support below us. Market's been stuck again between those two areas. Recently, we've had a really strong rejection from that high, and it could be the start of a newfound bearish move back to lows. It depends what the yen's going to do, or it could just be a short-term reaction at a very significant level. Maybe price eventually breaks through. Both situations look pretty equal to me. I wouldn't have a bias set in stone just yet. Based on how we're looking on the daily charts, very messy as well, very volatile, big move down, big move up, big move down. So not really seeing much consistency apart from just these waves, these oscillations. So we actually spoke about this on my channel yesterday with this consolidation. Really nice breakout, unfortunately, no retest there. But now that price has broken out of this range and we're pushing away, where's the opportunity here? Well, I would say it could be an opportunity should price come back to revisit that range. This could be a smart place for an entry and a continuation. The next valuable place would be up here, 157, 157.5. Anything in between here is just it's not a place where I want to be entering a trade. That's a place where I want to be managing a trade. So if I've entered down here, I've entered up there. Now here's where I'm looking to potentially take profits. Maybe if I want to scale into it, maybe, but that would be an area where I'd want to start managing just in case we were to roll over, and that happens, I can protect myself. So with dollar yen, I don't really see much opportunity where we are now, but should we come back to test the value here, that could be a nice place for a buy, again, provided we see some healthy rejection at that zone. If of course price just melts straight through, then I would refrain from buying there. But yeah, we've just been oscillating, so we're looking to buy low and sell high. Again, we want to try and match the conditions of the market here. So I would be looking at opportunities around here. If not, then 157, 157.5, this becomes the next area of value. But again, long term, I can't really say with a good amount of confidence what my bias is for dollar yen. I don't really have it at the moment. So yeah, hopefully that made sense for those currency pairs and gold, of course. We can take a look at the DAX as well. That's actually interesting. We can go through New Zealand dollar. I don't think the pullback is over for gold and silver. Yeah, like I said. Okay, I think my mic just accidentally unplugged there. Apologies, guys. Okay, I think I'm back. My mic accidentally unplugged there. Let me know if you can hear me before I start rambling and no one can hear me. I think gone deaf. Okay, no, I don't think it's you that's gone deaf. I think I am connected again. Okay, sounds good. Okay, thank you for letting me know. Apologies for that. Okay, so yeah, like I said, with gold, I'm not going to be so judgmental in terms of having a bias right now. Like I said, we've had that really big bearish move. We haven't recovered straight away. That for me is a big telling sign, because if we did recover straight away, okay, we're back in the bull cycle, but we haven't. So yeah, looking for further downside on gold and silver, I think is a pretty reasonable shout, to be honest. Anyway, let's go through New Zealand dollar, and I'll take a look at euro pound. I think that was mentioned as well. Okay, appreciate it, guys. Thank you. So yeah, we'll go for New Zealand dollar first. So another USD pair. So we have seen some strength for USD, and of course that has caused a lot of downside for a lot of the USD pairs. New Zealand dollar pushing down. So again, what conditions are we in? Those are the questions we want to be asking ourselves. And where's the opportunity in those conditions? Well, I'm looking at the market right now, and I can see a very expansive move back to what you could say is our extreme, our range high. And then you could class this as our range low. So with this, naturally, I want to be a seller in these areas. Now, based on how we're moving right now, I would want to be selling slightly higher than where we're at. I want to be positioned here. I want my entry to be around here, because then I can have a fairly tight stop loss and I can maximize my risk reward as well. Because we're kind of pushing away, jumping into any shorts now is kind of chasing the trade a little bit. So I wouldn't want to be getting involved now. If I'm looking a bit more intraday, well, we're about to push into support. Again, not really adding up to a great place to sell. Now, could we be looking for buys here? Yes, but again, short term. I wouldn't be trying to look for any big continuation. One thing in FX that I've noticed as well is that when the market already has a very expansive move, a very big move like we've had here, the opportunity is not really in looking for the continuation of that. The opportunity is most likely looking for the retracement. And I'm not talking about shorting big momentum plays when the market's flying and then trying to call the top. Because FX, we mean revert all the time, most of the time anyway. We don't really drift in a particular direction like an indice will. We normally come back on ourselves. So if the market has already had a big move in one direction, doesn't mean it can't go further, but it just doesn't mean I want to be looking for that trade. And normally the opportunity is in the opposite direction. But again, you want to wait for your confirmations, wait for the market to mature. So if you're looking for buys in this situation where we already have had a very aggressive move, I wouldn't be looking for another aggressive move. Again, not to say that can't happen, I just wouldn't bank on it. So if I was looking for buys here for New Zealand dollar, yes, we're coming to a pretty valuable area, and yes, price could bounce here, and yes, we could see some upside, but my expectation would be this would be a short-term trade. Maybe if I want to hold a small position to run, just in case if it continues, I would do that as well. But it would be a short-term play. And like I said, for selling ideas, I would want to be a lot higher up. So New Zealand dollar, that's the only opportunity I can see. Some short-term buys. But again, I want to see how price reacts with that. That's going to be very important. In terms of euro pound, not a pair I've been concentrating a lot recently. So yeah, I'm not a big fan of euro pound, but I like where we're trading into. This area here, 0.874875. Essentially, this is our resistance for the past few months here, and you can kind of consider this as a failed breakout, a failed price essentially failed to sustain those highs. We came back underneath that level, and now we're coming back to retest it. So essentially, this is a really nice place to be looking for some shorts. And again, not looking for any long-term plays. Why? There's no real momentum. There's no real consistency here with Euro Pound other than short-term fluctuation. So the idea is I'm going to take advantage of that short-term fluctuation, not looking for any trend plays, not looking for anything like this. You want to trade what the market rewards. If the market is doing this, then of course you want to be buying and trading stops like gold was in 2025, just consistently in a bull cycle. What's the market rewarding? Well, it's rewarding exponential upside. So you want to be positioned like that. If the market is just fluctuating back on itself again, well, then you need to be trading in that kind of style as well. And Euro Pound notoriously does that pretty much all the time. So with Euro Pound coming to a very interesting daily level, I do like this for some short-term sells back into support. Nothing more, nothing less. I like how we're reacting as well. We're seeing some wicks. You can go for some aggressive entries in this area because we've already seen some signs that the market is rejecting. So I would suggest this is an entry signal, but a more aggressive one. Essentially, you're betting on those rejections being enough. But what that allows you to do is it gives you a bit more room for the stop loss. You can give yourself a bit of room. And in terms of risk to reward, this still looks like a 4-5 to 1 potentially. And again, you don't have to even hold the trade that far. There's some support there you can target as well. But yeah, Euro Pound, I'm liking shorts. Of course, if price breaks through that will invalidate the idea. We move on, manage your risk, etc. But if we can hold that level, I like Euro Pound for some shorts. Momentum's quite flat. It's a significant area. As long as we can maintain that, I quite like the shorts. Okay, I can take a look at oil as well. We'll go for the DAX. That's the one I was supposed to go through earlier. Are you from the UK? Yes, I am from the UK. The accent probably gives it away. But isn't GBP being shorter this week? Yes, it is. Yeah, pound is pretty weak this week. Again, I'm a very technical based trader, so I'm always going to trade what's in front of me. Pound could be very weak for whatever reason, but I need to see that replicated by price. And of course, if price is showing that, then that's the play. In terms of Euro Pound, of course, we are seeing that because price has pushed up this week, so pound has been weaker than euro. But the funny thing is, things can change. And trading is not necessarily about what's happening right now. It's about what's going to happen between your entry and between your exit. And that's, again, a million things can happen. But if you're looking for the play and you're looking to short Euro Pound, essentially you are slightly bullish on pound, or at least you're more bullish on pound than euro. In terms of pound USD, we are falling out the sky right now. But again, USD is quite strong as well. So although pound is a bit weak at the moment, USD is pretty strong. So you got kind of a double situation happening there, whereas Euro Pound not the case. But again, if you don't want to be shorting pound if you don't want to be buying pound because of fundamental reasons, that makes sense as well. But you need to have that a part of your plan because you don't want to chop and change. It's either a part of your plan or it's not, and that will allow for consistency. But anyway, let's go through the DAX, and I'll take a look at oil as well. So yeah, DAX, I actually quite like the DAX because it's a little bit cleaner than some of the other indices. I mean, it's still quite messy, but I like the price action because we've been in this range for quite a while. We had a breakout of it, and to me, I would classify this as a rejection of the high of the range. So this is a breakout, retest, and now what I'm looking for is a continuation. The only thing I don't like is we are quite corrective. Typically, after the retest, I want to see momentum start to pick up, not continuously look corrective. It can be a slight red flag. But again, the key aspect is us remaining above this price. If we break below, then we're back in the range and everything's back a bit more neutral. If we can stay above and continue with these higher lows, then I do like the opportunity to trade it back to highs here and just kind of continue the momentum. So what I'm looking at for DAX, if I drop to the 4-hour chart, what I'm looking is price to maintain these higher lows and higher highs. So I don't want to see us break underneath this low. And that's great because what that does, it gives me an invalidation point for the trade idea and gives me a place for a stop loss if I want to have it in the best place possible, which is below structure. So at that point, if I can see price react here and hold, that could be enough for an entry. That could be enough for a stop loss, and the target, whether back to this high or that high, or if you want to trail stops, however you want to manage it, becomes a defensible idea. If the market does now break through that, well, then the idea is gone. Of course, it invalidates itself, and we might be back inside the larger range in the daily, and then my bias becomes pretty flat. But at the moment, it's bullish. We've seen a range, we've broken out of it, we're resting on top, we've rejected it. If we can continue this, I would expect more upside. So the bias is locked in for now until this area goes, or of course we create new highs. So yeah, the DAX, I would be leaning towards a bullish bias. I would wait for a deeper correction. That 24,800 area looks pretty attractive. That's where I want to do business and get a stop loss underneath. And as long as we can stay above that, I quite like the bullish bias here. So yeah. So that's kind of how I want to look at the DAX at the moment. We can go through oil next. No way short euro pound. Yeah, that perfectly makes sense. Fundamentally, pound is very weak right now. I mean, it is weak. Not even fundamentally, it just is weak. So because of that, you don't want to short pound. Absolutely, that's a defensible decision. But trading is not about getting something right. Trading is about having a process, sticking to that process under pressure. So it's not about, okay, I have a plan and suddenly that plan goes out the window because X happened. You know, the plan needs to sustain even if X is happening. Then after you can review and say, okay, I can make an amendment to the plan. If X happens, I do this instead. So you always want to look back on something and amend it rather than amend it in the present, because then anything could happen. Then you can just derail the whole plan. So if you have a plan that's based solely around price action, then of course that is your focus. If you take into account this and that, and that's within the plan, within the process, of course, take that into account. I'm a very technical based trader, so that's kind of how I trade, and that's kind of how I see the market. So that's of course what I'm going to share with you guys. But for whatever reason, if it doesn't line up, then of course, yeah, you don't want to take a trade you're not confident in. That's the worst place to be. I'll quickly go through oil and then I'll wrap things up. So in terms of oil, we're looking very bullish. We've pushed back to highs here. I was actually looking to see if we can bounce off of this support level for a buy, but it looks like we completely missed on that. And again, it's not a missed trade because I wouldn't buy it anywhere else. Price has to be at a confirmed area for me to take the idea. But 61.50, really nice support level. Looking to see if we can reject that level and a push back to highs. We've made this move now, and now we're back at resistance. There might be some short-term plays back down again. Not really my interest, just because momentum's up right now, and I don't really want to go against that. So I'm not seeing much here, unless you're looking very, very short-term, sure. But I was a bit more of a fan of the buys there. Just didn't quite get the entry, unfortunately. We might see a breakout as well, but personally, I wouldn't really try to do anything in terms of opportunities for oil. But anyway, guys, we have come up to the end of my segment here, so I do appreciate the opportunity and you guys tuning in and listening to the analysis. If you have found it useful, feel free to check out my channel. I'm pretty sure the team have dropped the link to my channel. You can check it out, more analysis, just as you've seen here. But guys, really appreciate you having me. Have a great day, great weekend as well, and I'll catch you all next week. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello. Happy Thursday. It's Thursday. Yes, it is Thursday. Fantastic. How's everyone doing? Hope you're all well. Hope you're all having a good week so far. we've had some pretty interesting markets. So yeah, hopefully you guys have been able to capitalize on that. So let's have a look at some trade ideas. Actually, I suppose we should probably go over what I'm in, and then we'll go over some possible trades. So let's take a look. So I'm still in silver. I've been sat in silver for quite a while now. It's not really done anything. So I executed, wait, hold on, let me get my brush tool up. There we go. I executed my original long position. What is it, back here? I think it was. So this is where I executed, and then executed another one here, looking to just build up a position over time. Now, ideally, I'd like to add some positions slightly lower, down towards 60 and 50. Whether we're going to get that, I don't really know. And to be honest, I don't really mind. I'm looking really for a retest of 120, and honestly, I would expect silver to go up towards 130, 140, maybe even 150. But it's a case of how long is that going to take? I have no idea. But at minimum, I would expect some of this left side to get corrected at some point. But it's possible we're going to get more of a sort of sideways choppy movement to the upside, rather than it being a very typical sort of V-shaped recovery. So that's sort of the idea right now. I suppose the downside at the moment, or one of those sort of minor inconveniences, or something to remain cautious on, I suppose is the right way of saying that, is these moving averages. So what we're seeing is a cross on all of them, on the 100, the 50, and the 200 and the 100. The 200 and the 50 here as well, which is just indicating that we're now out of this original uptrend, and we're actually now technically in a downtrend, and we've got these sort of lower highs that's getting printed. So from a technical standpoint, it's not looking great, but I'm still very bullish on silver. I don't think really anything has changed, or at least changed enough to warrant me not being bullish. So euro pound is the next one. Showed you guys this one, I think it was yesterday. So I decided to scale in. I'm not sure if I did show you the scale in or not, but either way, my entry criteria reappeared. Oh, let me change that to there. So we pulled back into a previous level of resistance here, retested our 50% fib level. We've established a bullish trend of these moving averages. I'm still quite bearish on the sterling, which is the pound. And the euro, I wouldn't say the euro is significantly bullish, but in terms of relative strength, I would say the euro is stronger than the pound, fundamentally, and also from a central bank aspect as well. Next up is the Aussie Swiss. Now, this one isn't a huge position. This is more of just a let it run type trade, just following this trend. The Aussie Swiss is getting a bullish reading right here on the EdgeFinder as well, which is a nice confluence. So we've got the bullish EdgeFinder reading, we've got bullish technicals, but the reason that I'm not overly interested in this market really, other than just having a small position to run, is because there's no technical entry. So the way I trade is ideally like this, when we have a very sort of smooth trend, but the pullbacks aren't easy, if that makes sense. So normally when I'm looking to get into a trending market, I like to draw a fib, and I like to see a rejection off the 51%, off the 50% to the 61.8%, and then a bounce off that level. But this trend isn't giving that. It's very aggressive, or very impulsive, I guess is the right way of describing it. Sort of moves to the upside, and then also on the pullbacks. So rather than trying to time an entry, I'm just going to sit in the trade. If it doesn't work, fine, minor loss. If it does work, great, then I'm paid to do nothing really. Next one is oil. So oil has actually benefited from some escalations, or not necessarily escalations, but talks and things, but it's not a trade that I really took on a macro basis anyway. We spoke about this one yesterday and also last week, actually. So I think oil last week was somewhere around this point. It could have been either of these two. And I was saying I would really want to get into oil if we could see a pullback towards the 50 or the 200 moving average, which we did do, respected this level of support, and then saw this rejection. So I decided to enter. And I'll be honest, I don't like using the word lucky. However, my mic's a bit low. Let me move it forwards a bit. There we go. Is that better? I'm not sure. But yeah, I don't like to use the word lucky, but because this wasn't a macro trade, but it has been significantly well impacted by the macro landscape and by the geopolitical landscape, I would consider this sort of a lucky trade, because although, yes, I was following the trend and it was technically a momentum trade, it wasn't in line with, again, my normal strategy with the fib and with my normal approach of relying heavily on macroeconomics. But I've been rewarded very well for that. So either way, I'll take the win. It is break even, risk free, just in case it does reverse. I won't be too upset. Again, it wasn't a trade that I put loads of effort into. It was just a trend following, very simple one. Aussie New Zealand waiting for a pullback. Nothing to discuss here, nothing to do, just waiting. Same thing with Aussie Yen. So we placed an order on Aussie Yen yesterday, I think it was around here. Unfortunately, actually, sorry, we sent out the buy position as a market to execute. I wasn't able to catch the position because I was away from my desk at the time. So I said pending order. So my team doing quite well in this one. Unfortunately, I'm not in it. So I did set a pending order. Pound CAD, we also discussed Pound CAD. So sat in this one, again, very sort of simple bread and butter setup. So what we had on this one was a very clear change in trend. So we went from, again, as I spoke about earlier, this bullish moving average formation, swapped over to bearish, double topped off here. And then we drew the fib from the high to the low, entered on this pullback to the fib, almost a sort of break and retest on this level, enough for me to take it as a valid trade. And now, yeah, it's just a case of sitting in. So I've got two targets on this one. So I've got a sort of shorter term, sort of a shorter term swing target around here, which would meet these lows and also line up. Oh, sorry, no, it wouldn't line up with the 61.8. I'm lying. But either way, it would line up really well with these lows, which is quite nice. And then long term on the daily time frame, I'm looking for a bit of a larger potential move down to these lows around here. Whether we get that or not, I don't really mind. I very likely won't hold it that long, but I like to keep these different target levels in mind. So then I can sort of manage the trade. If it's getting a lot of volatility, it's continuing the direction, and the headlines are continuing to print in favor of my idea, fine, I can hold for longer. If it stays flat, we're sort of slowly drifting down, I might cut the position at one of the predefined higher targets, if that makes sense. Dollar yen. This one was interesting, actually. So I took a short position on dollar yen this morning and then very quickly flipped ideas, actually. So I took a short position very, very impulsively. It was not something I'm proud of, but you know, it is what it is. I lost $30. It was a very minor issue, but I took the short position basically just on a technical setup. So we drew the fib, or I drew the fib from high to low. Again, very simple, pull into the moving averages. We rejected the 200 at the time, 200 moving average, and we're within the fib level. Now, we didn't see any momentum from here. So once we started flipping back to the upside, obviously I entered on this candle short. We then formed this bullish sort of hammer off this 50 moving average, off this 100 moving average. And then I sat there and I was like, what am I doing? Why did I decide to go short? So then I reassessed and looked at the Fed and I was like, you know what? I'm gonna go long. Actually, longs make a lot more sense. It was one of those trades where it was kind of, again, very impulsive and didn't really make any sense with the way that I actually trade. So closed it for, again, a very, very small loss and repositioned long. So it is what it is with the hawkish Fed. And Euro Aussie. So this one is sort of a DCA approach. Now, with Euro Aussie, Pound Aussie, the same theory applies. I've not read the chart, by the way, guys. I'm just running through these and then I'll read what you guys are saying. With Pound Aussie, Euro Aussie, I do remain very bearish, but the problem I've had was that I've caught Pound Aussie quite well. But since then, there's just not been any pullbacks. Like the daily is just a waterfall to the downside. The H4 is just a waterfall to the downside. I cannot get an entry. So I decided to deploy a different strategy. Rather than using my normal momentum strategy with the fib, I decided to go for a DCA approach. So you can see the management is already here on the screen. So if this trade doesn't work and we end up coming back up to this level, which was an H4 resistance level, and above the H4 200 moving average, I'll cut this position and I'll look to reallocate higher. Now, the reason I would want to do that is because I'm very cautious and I'm fully expecting a retracement or a mean reversion back towards the moving average cluster, whether it be the 200, the 100, or the 50, doesn't really matter. But I am expecting a slightly larger retracement before we continue lower. So I'm just keeping that in mind, but I am quite happy to establish a small position in the meantime. But that's it. So yeah, all my positions are doing very well. Actually, I can't complain about anything. But yeah, other than that, there's nothing else going on. So let me see what you guys are saying. Christian, hello, good to see you, my friend. Hope you're well. 79 Jeremy, hello. So hopefully my mic is a little bit louder now. Dre, Sluggy, hello, good to see you. I booked full TP on oil today, best trade this month. Fantastic. Yeah, oil's been really nice. As I said, I think, and I really hate to say and hate to use the word lucky, but this is kind of as lucky as I would really consider myself to get in the markets without it being influenced by research or whatever it may be. But yeah, in this case, I purely went in on just sort of a technical momentum play with just obviously the pullback, looking at the trend, and the EdgeFinder's reading neutral, but you know, it was a score of 4, so not great, but also it kind of loosely backed up being a buyer. So I was like, you know what, let's take it. Momentum is clearly bullish. We're respecting support. We've bounced off the 200 multiple times back here as well. So yeah, and again, yeah, very, very nice return on that one. So quite happy. Caught the Walmart earnings gap. Very nice, Aizen. I've got no idea about that, to be honest. So I'll congratulate you and move on because I've got no idea about the stock market and earnings and things. Is XAU USD the same as GC1? Yes. So GC is, GC1. Oh, I can't get it because I'm broker tied. GC is futures gold. And XAU USD is CFD gold. So yeah, that's the only difference. Oh, well, I'm saying that's the only difference. That is the difference. So Russell is getting a bullish reading. So we looked at the Russell yesterday, but the conclusion that I've got with the US markets in general is I'm not very happy being a buyer. So as you can see, I'm actually looking for potential short on the S&P. I've not done anything just yet, but we'll go over that shortly. So the Russell specifically is stuck sideways. There is absolutely nothing going on here. Now, we can look at this from 2 perspectives. We do have these moving averages, which are in a bullish formation. So technically or objectively, we are in a bullish trend. But on the H4, that's not really the same story because we're just sideways moving. We're stuck in a range. The moving averages are parallel to each other. So they're like train tracks like this. And that is a way for me to then objectively say, okay, the daily's bullish. The H4 is range bound. So really, I would need to see the H4 establish a bullish trend to then realign fully with the daily trend, and then I could get involved. But yeah, for now, can't do anything here. So I think if I was going to be a buyer, I would either take a very aggressive long position at the support and just look to potentially buy a low, or ideally, preferably, I'd like to see the break and retest and look to buy on a retest. So as for the S&P, here we go. Yeah. So, yeah, H4, there we go. So what I'm looking at, or what I was looking at, was this previous level. Now, this isn't a very clean level, which is one of the reasons I didn't actually execute anything, because first of all, I'm not very happy being short on the S&P just yet. And when I draw a fib, I like to have previous structure within the value zone of the 50% and 61.8%. We do have some sort of structure within this level, but it's being sort of very noisy as well. So not the best. But what we also have here is a pull into the fib level. We have the moving averages on the H4 crossing, indicating that we're no longer in this sort of range-bound, slightly uptrending market. We're now objectively bearish, and we've had a nice little cluster and then a quite decisive move to the downside. So technically, shorts are actually looking quite nice. And we've got relatively hawkish tone, or a relatively hawkish tone out of the Fed. So I do quite like the idea of being short, but then again, if we just look at the daily, it looks very strong to the upside. And then we've also got to factor in the idea that being short on the indices markets is very, very difficult because the natural drift of these is to the upside. So unless you've got a very solid reason to be short, you know, that could be anything, whatever you use for your analysis, but a very solid reason to justify the US stock market essentially maybe not crashing, but turning to the downside, it's not a great idea. So I am working on something, but again, as I've said over the past 1 to 2 weeks, I'm not ready to share it because what I've got is relatively loose research on a potential short idea. So what I don't want to do is sit here, tell you, I'm going short on the S&P because of X, Y, and Z, but then that doesn't actually play out because I've not fully fleshed out the idea, and then I've just gotten loads of people into an S&P short. That's obviously worst case. So I'm just going to avoid that for now, and maybe in the future when I'm ready, I will start sharing the thesis behind that one. What pair did I get lucky on? Oh, the screen was blurry. Yeah, so it was oil. It might be my internet. I'm not 100% sure, but yeah, it was this oil trade. I'm long Russell 2000 support. Very nice, Aizen. I hope it goes well for you. But yeah, I'm just looking at the Fed. Hold on, let me pull it up. Yeah, so Fed holds rates at 3.5 to 3.75 amid stubborn inflation, divided on cuts versus hikes, awaits lower inflation and data. So if we look at the, hold on, let me get rid of these. It's not what I wanted to pull up. If we look at the economic data, look at inflation, and then we can just look at overall inflation. So the CPI year on year, I wouldn't really use this as the absolute inflation indicator. So I wouldn't use this to say inflation is hot or low or cool, sorry, or sticky. But we can start here and then look at obviously the other inflation prints as well. But overall, 2.4, 2.7, 2.73. So we have had inflation cooling over the past couple of releases, or at least headline CPI, which is CPI year on year. But then if we look at CPI month on month, we're not really getting anything. It is just sticky. So this is what we like to prioritize, generally speaking. PPI year on year, again, not really doing too much in terms of direction. We're just sort of hovering sideways. Inflation's range bound, if you will. And then the same thing for PCE. So I wouldn't allow CPI year on year to then say, oh, the Fed's going to cut, because there's so much context that you would be missing there. Then we look at the labor market. So yeah, inflation is sticky. That's the point. That's the point I was making. Now, NFP, I wouldn't say it's great. Obviously, it's not great, but we have been holding up. Now, the downside, we could look at the actual numbers and say, yes, over here we were coming down. We've recently sort of stabilized, if you will, if that's the right word. But the revisions are on a very clear downwards trajectory. Obviously, they're not so much over the past 1 to 2 releases, but I wouldn't say the labor market is crashing. But I also wouldn't consider the labor market super hot or anything like that either. Now, unemployment rate has been coming down. And the reason I'm showing you all this is to then move on to the Fed, obviously. So then we look at unemployment claims. Slight push to the upside here, but again, I wouldn't use that as a standalone thing. We're obviously taking all of this data to then come to a conclusion. What do we think the Fed can do? So if we also look at GDP has been holding up quite well. So again, no real cracking in the economy, in inflation, the labor market, or in growth. So then I've sort of simplified all this, by the way, but if we then go to the interest rate projections and we look at the US dollar, so let's just isolate the Fed. Holding here, cut, and then another cut, and then holding here. However, I would say the Fed is actually relatively hawkish at the moment. So let me take a look at the CME FedWatch Tool. I haven't looked at that in a while. Hold on, let me just pull it up for you. So I'm not sure what the reading is actually at the moment. Yeah, so in the next meeting, March, we've got a 94.1% chance of a hold. So there are these are very, very small things. These don't yet justify being short on the S&P, but these are just things that I'm looking at, and then also looking at some other things to maybe say we could see some downside on the S&P. We could see some possible upside on the dollar, because again, the dollar is one of those things. It's like it keeps doing the same thing on repeat. We bottom, rally, bottom, rally, bottom. So not really a rally here, but still upside. Bottom, rally, bottom, rally. Are we going to get the same thing here? We've been talking about this for a long time. It's very possible, because obviously what you've got to think about is, even if you are super bearish on the dollar right now, that's fine. But do you think people were super bearish over here? Well, yes, because the dollar had a very, violent move to the downside. So I'm sure people were saying the same things back here and the same things back here and maybe even here. So it's a case of, yes, you could be bearish on the dollar, but is data going to improve? And is it going to be one of those things where the dollar ends up having yet again another bullish cycle? Maybe. Anyway, let's move on. Euro pound short from current resistance level. No, I'm long on euro pound. I wouldn't really say being short is a fantastic idea. I mean, to be honest, even the long positions I wouldn't say are the best quality, like in terms of the probability of them, but I do lean more bullish than bearish on them. James, loved your new video. Keep on great content. Aizen, thank you. I'm not sure which video you're talking about, but I appreciate that. I'm hoping you're not meaning the ChatGPT one that I put out today. that was very low quality. GBPUSD sell, yes. So I think actually the dollar pairs, so Aussie dollar, pound dollar, euro dollar, if we can solidify a dollar bullish idea, we could get some fantastic trades. So if we just look at these markets, we've had obviously dollar bear sort of sentiment in the markets. We've seen all these dollar pairs climb quite aggressively to the upside. Again, pound dollar, euro dollar, Aussie dollar, New Zealand dollar. If we can again change that, or we not change it, but if we get a change within that sort of sentiment, and we do get positive data for the dollar starting to come out, continuation on rate holds, maybe even bordering on rate hikes. I mean, I would doubt that, but if we did, there is fantastic room for us to look to go short in these markets. So what are we talking about? Pound dollar. Now, pound dollar is obviously already taken a bit of a hit. So I was talking about pound dollar shorts not too long ago. It might have been last week. Unfortunately, I didn't execute it. So, you know, it doesn't really mean that much, but we were looking at pound dollar. I think it was this. It might have been this, or it might have been this. I'm not 100% sure which one, but either way, I was looking to short pound dollar. And the reason is because, again, we've had that sort of not flip, but we've had a little bit more of a dovish outlook on the BOE, which is the Bank of England. And again, the Fed has taken a bit more of a hawkish turn compared to what the markets were expecting at the start of the year. So pound dollar shorts might be a little bit late right now, to be honest with you, especially if you're looking to swing trade on sort of the H4. You know, I think you've kind of missed this move. So I would be looking for a retracement. So actually, I think, I know I'm kind of word vomiting here, but I'm thinking while I'm talking, so I do apologize if I'm not making 100% sense yet. So I think actually what we could get, or what we could look for here, is if we can see the market come back up, we see the moving averages cross over into a bearish formation. This fib zone almost lines up, not fully perfectly, but it lines up with this previous low to use as a bit of structure. Then that would act as the break and retest pattern, and then we could continue lower and maybe come down to correct some of this left side here. Now, that's an idea we could keep on the table. So I'm actually going to bookmark or watch list that one. But the same idea applies. So with euro dollar, I've had an idea on euro dollar for a couple of weeks, and I've not really spoken about it recently, but we were talking about it a while ago. Oh, sorry. I think I didn't update you on this one. I got stopped out of my euro dollar longs, actually. So there you go. It's not being all sunshine and rainbows, but it is what it is. So yeah, euro dollar on the monthly is actually setting up quite a nice short position, I think. Now, obviously, this is a monthly time frame. I've got 5 minutes left, so I'll try and speed this up. Monthly time frame. So obviously, I'm not going to just short right now because it wouldn't make much sense. And I'm also not willing to hold a trade that's been taken on a monthly time frame. But we've got these lower highs that are getting printed. This is potentially the next lower high. So we've got this kind of trend liney action going on. We've pulled into this fib level yet again, and it seems we're showing a bit of rejection. We're still in a bearish trend with these moving averages. And we've got previous structure over here. Again, we've sort of come up resistance, resistance, and resistance again here. So there is the idea that we could look for a short position to correct some of this monthly left side traffic. Now, that would be a huge trade. That would be a large amount of downside. Bear in mind, again, this is a monthly time frame. But if we do get the dollar data improving and we do find some reason to be short beyond just technicals, I think there is some really, really good opportunities. Seasonality is a big thing here. Yeah, so seasonality on the S&P, I think, is bearish, actually. Let me take a look. It was part of what I was looking at, but because seasonality is not something I pay attention to very often, it's kind of, I just miss it. Yeah, so we can see here, February historically is a bearish month on the S&P. So it's currently down minus 1.38%. Average is minus average is minus 0.62%. So something to keep in mind. I mean, we're almost at the end of February. So this may have been finished by now, but we'll see. Either way. Small caps prove to be the play so far. Loves Goldilocks zone, aka stability. Yes, absolutely. What is the market strategy based on fundamental analysis? I'm not sure what you mean by that, but generally, if you're asking about how to use the fundamentals to find a trade, I've actually got a video coming out very soon that will be linked in these stream chats at some point. But the idea really is that we use the EdgeFinder to get the initial idea. So this is trade discovery. So we look to say, okay, for example, the Russell is bullish, the pound dollar is bearish. So specifically, if we were looking at pound dollar, we would then go into pound dollar details. So you just click on it and pull up the details. Please don't email me. I won't reply. Let it load. And then once we have these details, we can just actually look at what is going on. So technicals bearish, COT is bearish, sentiment's bearish. There's not really anything going on with growth. We've obviously got some bullish, some bearish, some neutral, all counteracting to zero. Jobs market's bearish. So then we could go and dive a bit deeper. You would again go and do what I did earlier. You go to the economic data, look at growth, look at inflation, look at the labor market. Then you go down to the interest rates data, and you would look at the rate projections and compare where the divergence is. Remember, the divergence is really the key factor. Not the divergence between the current interest rates, but the divergence between where the markets expect the rates to go next. So if, for example, the Fed is now being viewed as hawkish and the markets are expecting a hold by the Fed, and the markets are then also expecting the Bank of England to continue cutting, whether it be more aggressively or sooner, that obviously gives us that divergence. So that's how we could then look at pound dollar shorts. Obviously, I've sort of speed ran through that to save time, but that's the core idea behind fundamental analysis. These markets are reflecting and pricing macros really well. Yeah, I've got to say, actually, after the mess we've dealt with in 2025 with tariffs and just the difficult markets, it's definitely been made up for. I think the start of 2026 might be the best period I've had, short-term period I've had in my trading career, and maybe ever. You know, I mean, all my trades pretty much are in profit. I think almost all of them, except one or two, maybe. Even those ones are in small drawdown. It's only EURAUD is the only one that's down $20. All the others are doing very well. So, yeah, fantastic. Absolutely fantastic start to the year. Nick will host anyone. That's not true, but that's okay. If you do not agree or you do not like me, you can come back when there's a new host. I'm leaving in a minute anyway. Russell's running. Very nice. Well done. James, what do you think about Aussie bonds? Aizen, hold on. Let me just see who's on after me, and then I can throw it over. Oops. And then they might be able to answer your question. I just don't want to take up any more time. Over the past couple of days, I've been going over my slots. So you have Marco coming to take over the show. Guys, have a fantastic rest of your days. I'll see you all tomorrow. Stay safe. Don't get margin called. And I'll see you.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. Before we get started, I have a form for you to fill. So let's go to Jot form. In the comment section, you will find the link to this form, fill it out, and then you'll get entered into a DNA funded giveaway. So in like 15 minutes, I will put all of the names in the wheel of names, and the wheel will pick our winner. Going through the markets, let me see, to jump on the calendar quickly. I was looking at the yen because we are getting some positive news for Japan. So let's do red folder, apply. Let's see. So we had the RBNZ yesterday. That turned out to be more dovish than expected. So I think if you look at, for example, AUDNZD, it went up. Yeah, definitely did. What about NZDUSD? Went down. Yep, absolutely. So the RBNZ event, there's the new leader of RBNZ. The name is Anna Bremen, if I'm not mistaken. She is apparently a bit more dovish than expected. So the New Zealand dollar lost value across the map. That was a pretty important event if you're looking at the New Zealand dollar. Aussie employment change, okay, getting smaller and smaller, but the unemployment rate went down. So from the forecast was 4.2, the actual number was 4.1%, which is nice. And then you had the claims. So claims for the US dollar, not that important if I'm being honest. And for tomorrow, we have flash manufacturing for the GBP, the same thing for the dollar, and we have the core PC price index, which should be a inflation print. So that is kind of the most important event for tomorrow. That would be the core PC price index. Let's go through. CAD CPI was on Tuesday. So inflation print, what is the year on year? Went down a bit. Yeah, so inflation cooling in Canada. If we go to data, inflation, CPI, we look at the CAD. So essentially, looks like inflation is okay. Inflation looks all right in Canada. Let's check out some other stats, such as the GDP for the CAD. Let's take a look. Looks fine. And now the unemployment. I think the unemployment was problematic, if I'm not mistaken. CAD unemployment, 6.5%. I mean, it's going down, definitely going down, definitely starting to trend lower, but still an issue. So it's still pretty high if you compare it to other economies. If you compare it to other, let's say G7 countries, 6.5% is still pretty high. The main thing I want to mention for today is looks like the US is sending a lot of ships near Iran. So there could be some issues in the name is Strait of Hormuz. Did I pronounce that correctly? I'm not sure. Anyway, near here, Dubai is here as well. So don't go to Dubai in the upcoming few weeks, because there could be some drama with the US and Iran. The US could actually take some military action against Iran. And I'm not talking about bombing a nuclear research lab. I'm talking about a full-on attempt at a regime change. So the US just doing what the US does, attacking other countries. Is it justified? I'm not the expert. I don't know anything about it. I would agree that Iran maybe shouldn't have nuclear weapons, but having a full-on invasion may not be also the best solution. If you look at oil is actually flying higher. So flew higher yesterday, flying higher today. That is probably because of the drama with Iran. So if that heats up even more, oil prices will go higher. Oil prices are directly controlled by geopolitics. Iran is a huge exporter of oil, I believe. So they produce a lot of oil. And if that supply gets rocked, if the whole Middle East kind of gets into the conflict, or not in the conflict, but as part of the conflict or near the conflict, the supply of oil could have some issues. And if the supply has issues, the price will go up. So that's the situation at the moment. The possible attack or invasion, or however you want to call it, could happen this weekend. So this weekend we could see something happen, because if you have been noticing the posts, again, the US is moving a lot of ships. So it looks like they're preparing for some sort of a move. That is kind of also what Russia was doing before they invaded Ukraine. They were placing a lot of troops right on the border and through satellites. Everyone knew that, but no one knew that they were actually gonna invade Ukraine. So that could be happening with the US and Iran. My advice: if something happens over the weekend, we could see gaps. So we could see gaps in the market. As far as a general forecast, I have a post from Brent Donnelly. I can't really put it up on the screen, but his prediction is stocks down by 1 to 2%, Euro Yen down by 1 to 2%, Aussie Dollar down by 1 to 2%, Euro Swiss down, USDJPY down for around 1%, and gold up, of course, because it's a risk-off event. Bonds all over the place. So volatility in bonds. That is kind of the general prediction. Also, oil could gap up for sure. Let's say for tomorrow we go up a bit more. Let's see. Yeah, essentially we go up a bit more. And then the US attacks Iran and we could gap up. That could happen. Just watch out, be careful. And that is also making me a little bit hesitant to get in the Aussie dollar. Because if we do get some issues, if we do get some problems, Aussie dollar, I believe, is going to go lower. The dollar is going to act as a safe haven. The Aussie is a risk-on currency, so it's not going to love that situation. So I'm rethinking of maybe being patient at least until this weekend passes, so that I don't get gapped. So if I take a position today or tomorrow, I could get gapped over the weekend on Sunday, and then I could lose much more than I initially risked. So maybe I should wait for the next week to enter. As far as the levels go, I'm eyeing the 20 MA. I'm also looking at this level of support. So I'm also looking at 0.69450 or 0.695. That's a good level right there. So let's wait a bit more. Let's see a bit more of a retrace. I'm gonna move my alert a bit lower. I do still like the overall story. RBA is hawkish. The Fed is dovish, planning to cut interest rates. It creates a pretty good divergence. Price action looks healthy. Gold, I'm bullish on gold. Aussie should follow the price of gold long term. So if gold continues crushing higher, the Aussie dollar could definitely follow. We know that Australia is a major exporter of metals. Okay, so they are very much connected with the metals market. And the currency is connected with the metals market. As far as gold goes, I am waiting to see how the Chinese New Year situation develops. We know that there is less demand for gold during the Chinese New Year. That is this week and the next week. So I'm going to be a bit careful. And I'm waiting for a bullish reading on the EdgeFinder. So if we go to top setups and we search up gold, we have a neutral reading at the moment. So I want to see a bullish reading right here. I want to see a bullish reading, and then it's gonna be game on. Because we have the PCE right there, it's gonna happen next week. We have the PPI print, which should happen the week after that. Maybe we could get a situation shift. Maybe we can get, let's say, the COTS to become bullish, the crowd sentiment to become bullish. We'll have to wait and see. I will definitely not take a buy entry if there is not a bullish reading on the EdgeFinder. So I really want to see the EdgeFinder print bullish, because I know it has a really good success rate, a really good win rate on gold. By the way, if you want to get the EdgeFinder or join the A1 Discord, get all of my trade signals, you can click the link in the description and you can use my code Marco to get 25% off. So if you want to join me, if you want to learn to trade from me, if you want to get all of my positions, all of my insights, click the link, use the code Marco, and I will see you inside. Let's see the comments. I'm going to post the link to the form one more time. So if you want to participate in the giveaway, if you want to get a free DNA funded account, make sure to fill out the form and you will get entered into a giveaway. Hello, Sluggy. Aizen, Marco, I'm long. Russell 2000. Check the Russell. Sure. Let's take a look. Russell. Well, looks fine. Looks fine. Definitely looks better than the NASDAQ. Definitely looks better than this. What about the S&P? Kind of looks similar to the S&P. Am I bullish at the moment? Personally, I'm not, because the whole market sentiment seems to be a bit neutral to maybe even bearish. The software drop, the sell-off in software stocks is not helping. The narrative that artificial intelligence will replace a lot of jobs is not helping the market. So that is why I'm not super happy to enter at the moment. If you're in, if you have your reasons, if you followed your plan, then definitely just keep on following the plan. Let's see, Russell. Bullish reading on the EdgeFinder, which is interesting to see. Yeah, I'm just not super happy to get in. I'm waiting out the situation with US stocks. The high was on the 22nd of January. Long term, I am bullish. Long term, yes. Short term, I would rather be in the Nikkei. Okay, so short term, I would rather take my chances, or I think the probabilities, the edge is a bit better in the Nikkei. But if you get rate cuts, which we should get rate cuts in 2026, if you do get rate cuts, we could see Russell benefiting from that, because I think rate cuts have the best reaction on small cap stocks, and Russell is 2,000 small cap companies. Sir Marco, I like that name. Your predictions to buy Japan didn't really go well yesterday. Part of the game, part of the game. The statistics are win rate 50%. The best traders in the world have maybe 60% win rate. What does that mean? 50% of the time you will lose a trade. The key is to have your winners bigger than your losses. So for those of you that are dissecting every single position, wondering, is it going to be a winner or is it going to be a loser? If it's a loser, what did I do wrong? Maybe you didn't do anything wrong. It's just part of the game. So until you can detach from a winner or loser mindset, you're never going to be successful. You need to look at every single trade in terms of a large sample size, in terms of probabilities. So you need to know, what's my win rate? What's my average reward to risk? What is my trade frequency? How much trades does it take for my edge to play out? Or how many trades does it take for my edge to play out? So for me, I think I have a 1.8 to 1 reward to risk, maybe 2 trades per week on average. That's kind of the statistics. That's what most traders have. You're going to lose most of the time. That's the name of the game. That is why trading is so tough. So even with the Nikkei being down on the day and the EJ being up on the day, which is bad because I'm in a short, I just know it's part of the game, and I just need to let the probabilities play out. My mom's anniversary plan was Dubai. Now it got canceled. She's disappointed. Why did it get canceled though? Did she cancel it because she's afraid of the whole US and Iran drama? I know personally, at the moment, I wouldn't want to go there. So I've been to Dubai a year ago, There was no drama at that point in time, but now, I mean, if you go to Google Maps and you search up Dubai, right there, it's right near that Strait of Hormuz. Iran is just above. This is Iran, so it could get a bit troublesome, you know. I'm not an expert. I just know the US is moving ships near Iran and possibly moving ships to initiate a strike, possibly invasion. You never know. You never know what's going to happen. It's a troublesome area. You know, Middle East, it has always been an area that's full of conflicts. Very rarely has there been peace in the Middle East. Okay, I kind of lost my train of thought. Long Russell since 2579. Let's see, Russell. 25. Nice. That's a great entry. Definitely a great entry. I think overall long term this is going to go up. But at the moment, I'm not looking to enter. Sluggy almost got wiped out on the recent pullback. Russell is getting a positive reading. Yes. Hey man, what's up? Good day to you. Good day to you as well. I'm doing pretty well. What's going on with Euro Yen, other Yen pairs? We can take a look. Trump speaking, S&P thoughts. Trump good talks are being had with Iran. We have to make a meaningful deal with Iran. Let's see. If I go to financial juice. Okay, UK blocking Trump from using bases for strikes on Iran. Interesting. What about if we go to commodities? Trump will find out about Iran in about 10 days. Good talks are being had with Iran. We have to make a meaningful deal. Okay. Maybe some progression. Nothing is in writing though. So you need to have stuff in writing. This is all just rumors. This is all just he said this, they said that. Unless it's in writing, unless it's a real deal, there's a lot of uncertainty around it. So that's the current situation. Our agent sold us. We have to fly above Iran. So risky. Yeah, it is. It is, unfortunately. So I know that's the situation. You need to decide what's best for you. Time for the giveaway. Let me get all of my, or let me get out the form. Today is the 19th. Okay, we have some names. Awesome. Let's copy. Wheel of names. Spin. Let's see. Joseph or David? I think it's gonna be David. Joseph. Okay, Joseph H. Congrats on being the winner. I have your email. So after my segment, I will send you a code to a 5K one-phase DNA funded account. Okay, you can expect an email after my segment. For those of you that didn't win, but you want to get funded, you want to expand your trading capital, because that is one of the biggest issues for traders. So maybe you can make 10, 15, 20% per year. But if you only have 5K or $10,000 in your account, that 20% per year is going to be minimal. So it's a huge issue. It makes traders over risk, over trade, and blow up any sort of capital that they have. A good fix for that is looking at prop firms. If you have a good edge, of course. If you don't have an edge, you have no business looking at prop firms. But if you do have an edge, if you want to expand your trading capital, if you have proven yourself in the markets, check out DNA Funded. So DNA Funded, great prop firm ran by professionals. There's a big broker behind it. And you can use the code A1Live to get 25% off any DNA funded challenge. So A1 Live, 25% off any DNA funded challenge. This is my personal 25K two-phase account. I'm up 2.86%. Free trades open. Buy on the S&P, sell on EURGBP, buy on gold. And this challenge is purely being traded by ChatGPT. So I'm using only ChatGPT to trade this. So far, I've had some pretty good results. And the main point of it is, of course, to get a payout. So these are not my signals. This is not my personal trading. This is just signals from ChatGPT. He takes, I don't know, 1 to 3 trades every day. So to make things a bit more interesting, I'm doing ChatGPT signals. But if you want to get my trades, my positions, definitely consider joining the A1 Discord. So A1 Live, 25% off, DNA funded, reliable prop firm. I've had a great experience so far. Check it out. Trump, we can't believe from what we know. Yes, so Trump is a volatile guy. You never know what he will say next. Finally hit a 80K bench press. Awesome. Congrats. That's a major achievement. So congrats to Sluggy for hitting a 80 kilo bench press. If you guys have any requests, any charts you want me to bring up, any news you want me to cover, definitely let me know in the comment section. But let's continue. As far as my watch list goes, it hasn't changed. Still the same, basically. So I have the same things. Just a second. I have the same things on the watch list. I have 2 positions open. Just to quickly run through. Buy on the Nikkei. Sell on Euro Yen. Aussie dollar, looking for buy setups. 695 level seems like the best level to get in at the moment because it's a good support level. Gold, I'm waiting for the Chinese New Year to pass, and I'm waiting for a bullish EdgeFinder signal. Pound Aussie. Pound Aussie, I want to sell, but it's moving away without me. So as far as the Pound Aussie goes, it is just flying lower, not pulling back, and just not giving me an opportunity to get in. So this is unfortunate. I'm looking at the 20 MA as a possible level to get in, but if we just continue flying lower, I can't do much. So I'm pretty much powerless to do anything. I need a pullback. I need a bit of a rally to the 20 MA, but I'm going to keep it on the watch list because I like the pair. Main point behind it is that the Bank of England is looking to cut interest rates while the RBA is looking to hike interest rates. Look at the graph, going higher and higher throughout 2026. Gold. So I kind of covered gold. I'm 16. I do 5 kilo per PR60. Not sure. Do you do 5 kilo of what? Bench press? No, can't be that low. MSFT, please. Yeah. MSFT bearish. Microsoft not doing well. Tech stocks not doing well in general. You can see it in the NASDAQ. So NASDAQ just keeps on getting sold off. You can look at Meta. I mean, the leaders of the basket, just, it doesn't look great. NVIDIA, flat. Google, GOG, selling off below the 20 MA, broke the trend line. Right there we have this trend line. It got broken. So companies are shifting from buybacks to capex. Buybacks is when a company goes in the market and buys its own stock. So they artificially inflate the stock price. Now they are taking that money and they're putting it into capex. Capex spending, capital expenditure. They are researching artificial intelligence. They are investing into artificial intelligence. Well, the problem with that is artificial intelligence artificial intelligence will only pay off in the next 2 to 3 years. So you're going to burn a lot of cash short term, you're going to hurt the company, and then maybe in 2 to 3 years it's going to pay off. The problem for that is your stock price is going to suffer. If you burn through a lot of cash and it doesn't create an immediate return, like buybacks would create an immediate return, you're going to see bearish price action. So for the whole basket, for the whole US stock market, I want to see all-time highs on the NASDAQ first. So I'm not going to be convinced unless we can go back to all-time highs. Current price action is flat, range-bound, bearish, doesn't look great. EdgeFinder confirms it. NASDAQ. Neutral reading on the NAS. That's about it. So I'm being patient. I'm staying out of that. I think the money is flowing into the Nikkei. I think the Nikkei is catching a nice bid. I think the Nikkei is in a nice uptrend, and this can definitely continue going higher. So that's my personal plan of attack. Euro Aussie looks appealing. Okay, we're going to check it out. Euro Yen. Sorry, I meant 55 kg. Oh, okay, cool. So you're doing 55 kilos. That's awesome. That's great. Congrats. That's a great number. Just keep on going to the gym, you know. Yeah, that's great at 16. Absolutely. Euro Aussie. Euro Aus. Yeah, looks fine. Looks fine. Selling on rallies, selling on pullbacks. Good plan, I would say. We have the 20 MA. I'm definitely still bullish on the Aussie. The problem with the euro is I am bearish. You know, I sold it. I sold euro yen, but that's because I thought euro yen is a better opportunity, a better currency to sell compared to the dollar yen, because the dollar is kind of catching a bid. The problem with the euro is right here, that the ECB is pretty much staying flat. So the ECB has found the neutral rate and they're staying flat. That's an issue. That doesn't really give me, look at this lady. She looks so crazy. But that doesn't really give me a bullish or a bearish reading on the ECB or on the euro. The euro yen trade I have right here is not really based on euro weakness. It's more based off, let's find something that is a bit neutral, a bit more neutral than the dollar, and let's buy the yen against that currency. So selling euro yen makes sense to me at the moment. But this is mostly a bet on yen strength, not really on euro weakness. Okay, so final thing, because I'm out of time. One more thing we can cover, the DAX. Let's do the DAX. DAX actually going higher. I told you new money seems to be flowing into the Nikkei, the DAX, and into emerging markets. If this continues, if the DAX can wake up a bit, if we can produce some actual trends, I'll be happy to look for buy setups. Let me just check it on the EdgeFinder. This is a problem as well. I want to get a bullish reading on the DAX. So DAX, let's see the DAX breakout. Let's put an alert at all-time highs. Let's see what happens. That's about it from me. Thank you very much for watching. Don't forget to use the code A1Live to get 25% off from DNA Funded. You have Tiger Berry coming on after me. Good luck in the markets, and I will see you tomorrow. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DX Trade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, OLA prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with OLA Prime. Now back to the live stream.
What's going on, everybody? Tiger here. Happy Thursday, about 9:30 a.m. my time here in Kansas City. Looks like I'll be rounding out the show today. Save the best for last or the worst for last, whichever way you see it. But we'll see what we got today. Yeah, I was just looking at some of you guys talking about weightlifting up here. I kind of went on my own little saga, if you will, about 10 years ago. I was just, believe it or not, nothing but skin and bones. And I got into weightlifting pretty hardcore. I had a roommate at the time, and we went every single day. So I very quickly had quite the change. I think I got my deadlift. I mean, the only real claim to fame I have is my deadlift. I did get 480 pounds. That was the highest I got on that. I was shooting for 500, but it was about that time my roommate moved away. So I missed out on my weightlifting partner after that. So I never got to 500, but maybe one day. We'll see. But yeah, as far as today goes, obviously we're getting some, we had the results come out for, let's see, Wednesday. We need to be on Thursday. The unemployment claims, which came out to be quite the nice number. So pretty good for the dollar. Yeah, President Trump is set to speak here a little bit later on for, I do believe it's on the economy. Let me see here. I was just looking at that. Where'd it go? Right here. Yeah. Talking about the economy there in Georgia, in the Peach State, right there in Nick's backyard, right? So that's something to be, a good idea to be checking out the readout of that afterwards. I know I'll be looking at it. As far as the minutes that we had yesterday, those FOMC minutes, guys, as always, you can find everything that they do as far as all their lip flapping sessions. You can find it on the Federal Reserve.gov site. And what I honestly like to do, rather than reading through the whole entire thing, because as always, it's as boring as watching grass grow, watching paint dry. You'll start drooling down the side of your face. What I like to do is just, take the speech and just copy and paste the entire thing, because you guys see how long that is. And then go over here to Grok or ChatGPT or DeepSeek, whatever you use, whatever you prefer as far as an AI site. And just simply type in something like this. Hey, what changes did the FOMC minutes have compared to Chair Powell's last statement? Okay, talking about the last rate statement. Does this sound more hawkish or dovish? And then just paste that entire thing, and then it'll just kind of simplify it. You can tell it a pager, a half pager, whatever kind of summary you're looking for. But I really like doing this on all of the speeches. Because all we really care about is the main parts. Because a lot of this Fed speak is just boring as hell. I don't know how else to say it. They like to repeat the same lines over and over, and oftentimes it can be seen as, well, they didn't really say anything. But there's key words, there's key phrases, there's key sentences that are good idea to pull out of that, right? So. What I like is when it goes into a summary like this, like it'll talk about the economy or labor market, whatever, but the first sentence or two is talking about Powell's statement, and then kind of a contrast or comparison, from the Fed minutes. So I would encourage you guys to check that out. Just kind of play around with that, and you can go through the economic calendar and look at all the speeches and just kind of play around with it and see what best works for you. That just so happens to be what I tell it to do, right? But it's just really cool to be able to kind of compare from the last to the minutes for all these different items. And so of note, one of the things I did see was 8 out of 10 did vote to keep it the same. A couple of them voted for that 25-point cut. I do believe that was down here somewhere. Yeah, right here. Okay, 10-2 vote. talking about, let's see, I believe it was it Waller? I think it was Waller and Miran, okay, voted to cut, while the rest of them remain the same. So it's just kind of an early vote, I guess, if you will, for the next Fed statement, which does come out. When is that coming out? This should be coming up soon, right? Let's go find the CME FedWatch Tool down here. I think yesterday when I was looking at this right before the minutes release, we were sitting at a 91% chance of remaining the same, and now we're up to a 94. So there you go. A little bit on the hawkish side. And it tells you clear as day the results, guys. The minutes sound more hawkish than Powell's press conference statement. So I would just suggest you play around with that and just be guys, I think I lost my back. Am I back? Am I back? My signal cut out. 1 second, guys. Let me make sure I'm on. Okay, I'm good. Sorry about that, guys. I have a $3,700 laptop. You would think it'd be working pretty damn good, but sometimes I get those little flickers and where I lose signal. So apologize for that. But yeah, just to finish my thought on this, it's just remember, these are language learning models. So sometimes when you do this, some things may not match up. So it's always a good idea just to kind of cross-reference. No, don't necessarily take this as the gospel. It's pretty good at it. It's pretty good about doing what you say, but it's still a good idea just to kind of cross-reference. Look at the sources, okay? But anyway, I just wanted to point that out. And as far as yesterday goes, guys, I sat on my hands the entire day, just getting back over here to the top setups. The Aussie strength is what I was looking for. So I had set up some alerts, and these are the alerts that have hit for me in the last day. Okay. Now the Aussie dollar, that's the one that I ended up getting a small winner on. The Kiwi dollar. Let me see. The Kiwi dollar was on the bullish list, but as you can tell, it's now back to neutral. So the New Zealand dollar is one where, let's see, 59.60. Yeah, I was looking at this area, but because we went to neutral, I'm just basically avoiding it, guys. Avoiding it. So that's your daily. Go down to 4 hour. Let's see here. 4 hour or 1 hour is what I need to go to. And the other thing too is, guys, by the time price come back down to my zone, well, now my 50 EMA is under my 200. So as always, I want that 50 to be over the 200. Talking about the exponential moving averages whenever price returns to my zone. So that is another reason I just avoided this signal, right? So that was the basis of pretty much all my signals that hit yesterday. Okay, I had some hit that just fell to the neutral, fell to neutral territory. So if it's out of sync with the EdgeFinder, guys, I'm out. I'm just out. I want to follow the strength. I want to follow the fundamental sentiment strength. And as always, guys, he does have his promo going on the rest of the week, 40% off, but 45 if you chime in during the stream. Okay, for the EdgeFinder. Just think of it this way: the people that pay $2,000, $2,200 a month or whatever it is for Bloomberg Terminal, okay, they're paying that every month. But with the EdgeFinder, for a fraction of that 1 month cost of the Bloomberg Terminal, you're getting this. Okay, you're getting the EdgeFinder. And for every upgrade and update that Nick and company do, there's no extra charge on that. Okay, you get all the free updates and upgrades. So it's beautiful. I can't keep track of this EdgeFinder because it seems like every time I turn around, there's something he's improving on it. And relearning all the spots over here, all the buttons and where they're at. So it's awesome, guys. It's really awesome to see the constant updates and upgrades. And I know he's doing even more. And I know he's doing even more for the stock box if you're into the stock side of things, guys. So definitely check those out. You will not be disappointed. Okay. But anyway, yeah, just to look at some of these alerts. And as always, guys, if you have anything you'd like me to shove to the front of the list, then let me know. Because I'll be honest with you, I'm still kind of sitting on my hands today. I still kind of look at the EdgeFinder for my trading style as a little bit more on the slim picking side, kind of like I've said the last couple of days. I like the higher scores. Now, Russell obviously would meet my criteria, the pound dollar, the pound Aussie. That's really the top three, but I don't personally have the Russell on any of my brokers, so I can't even trade it. So if I'm just sticking by the scores I prefer to see, it's really just the two assets, which we'll take a look at. Pound dollar, pound Aussie here in just a second. But yeah, Windows will be Windows, Sluggy. That's right. What's happening with gold? Are we looking for a big retracement? Let's go look at gold real quick since you asked. Yeah, as far as gold, I mean, I know I kind of went in depth with this a little bit yesterday. I'm just not as excited about the fact that we have the higher lows, but when we got that higher high, it just wicked above. Okay, I like to look for breaks of structures. I like to look for those newly created impulse legs, and I can't with a straight face say that this is an impulse leg when it broke and it just wicked, but it didn't close up here. So in other words, you know, if I'm looking at this swing low, I would have preferred to see price break and close up here to break above this structure point. But all it did was wicked and just kind of died off and went neutral again. So, you know, that's what I'm after. If we can get a break of structure like this, then yeah, I'll be looking for a newly created demand zone somewhere here, probably right here at this double top. Okay, I don't know. I think that's probably where Nick's been talking about it as well, but it just makes sense. And I need to turn off my magnet for a second. You know, for a retracement here, and then just keeping in mind that you've got an overhead supply zone that you'll definitely want to be aware of. That's still a ways away, but that's probably my favorite setup right there. Taking advantage of the former resistance becoming a potential support. But, you know, as always, and of course, we actually need to move everything this way because now we're looking at this. So this would be a potential swing low, but I don't really call it a swing low until we start breaking these structures and close them. Like I said, you know, come up here, get up in this territory, and let's get rid of all these double tops, because there's going to be liquidity up here. There's going to be buy orders just chilling up here, right? There's buy orders there from the short sellers that forced price down. There's buy orders sitting up here from the short sellers that forced price down here. Hey, that's liquidity. That's liquidity, and that's why I colored it green, because they're buy orders. These traders are selling, so if their stop losses have to be a buy order, right? It's the opposite. So, you know, a little bit bigger picture, if I'm a bank, I want to come up here and collect these liquidities, because if I want to ultimately take price higher, well, I got to play around with the liquidity a little bit. Like I mentioned yesterday, they can't get into a trade a full trade all at once. They have to layer in. Okay? So collect the liquidity, come back down, collect the higher liquidity, because there's going to be some sell orders down here. Sell orders. So there's sell orders here from the buyers that pushed price up. There's sell orders down here because of these buyers that pushed price up. So it's just a game of playing liquidity, guys. Come up here, collect liquidity. Now, I want to see it go through that liquidity so I can ultimately take price like this. Right? That's my favorite. But I could also see the banks doing this. Come up to collect this liquidity up here, to push price back down, to collect this liquidity, add these sell orders along with the unfilled orders to push price up. Right? There's a couple different ways of looking at it. It really just depends on, you know, whether or not we break that structure. But ultimately, I'd be wanting to, you know, sell, get out of my position by the time we hit that really strong 4-hour indecision candle, supply candle. So, yeah, I'm just sitting on my hands with gold. You know, I really am right now. It's given, I do believe it is still giving us a bullish. It fell off the list, actually. Never mind. So gold actually fell to a neutral. Okay, we're down to neutral too for gold. So that's an easy reason to ignore gold, just in that by itself. Because yeah, we were getting a +6, I think, this morning, if I remember right. But but we had the good employment numbers. Okay? We had the good unemployment claims numbers from the US dollar. So that's good, positive, and bullish for the dollar. And, by default, a lot of these are obviously going to play the opposite side for gold and silver. Remember, gold and silver like to thrive on chaos. So if the dollar's getting some good readings, and I know I mentioned this yesterday, but we did have 4 lighter impact events that were all pretty good. We had the building permits, the housing starts, the durable goods orders that came in hot. So that's again, they're light impact, but when you stack a whole bunch of them together, as far as I'm concerned, they're almost as good as one red folder event. Swiss yen, Josh? Yeah, let's take a look at Swiss yen. See what we got over here. Swiss yen. Yeah, and I do know it is neutral, I think. Yep, we're down to neutral territory. So if we just go to our neutral list, Swiss yen is giving us a straight up neutral reading of 0. So negative on the technicals, negative on the relationship between smart money and dumb money. That's the sentiment, but bullish on the fundamentals, right? So it's just a very, very mixed signal. And again, keep in mind the economic, I should say the fundamental analysis. Think of this, guys. This is something I've kind of realized. When we're looking at the top setups, okay, if we're just isolating the fundamental analysis, so the growth, the inflation, the jobs numbers, there's 14 of these items down here. Okay, 14. And when we compare that to the sentiment and the technical combined, that's only 4. So, this is the whole point of why, as far as I'm concerned, as far as the way I look at EdgeFinder, this is why, to me, the fundamental analysis is the most important part, because you will have a lot of traders that trade just the NFP or just the unemployment claims, unemployment rate numbers, or just the GDP. Right? Comes out really hot, they're going to sell, or they're going to follow that without taking into consideration everything else around it. So, so that's obviously the biggest piece. Okay, it's the higher weight. Fundamentals are everything. So I just wanted to point that out. 14 of the 18 are for fundamental. Okay. So anyway, this will simplify simplify life for you. If you guys don't have it yet, again, he's got his promo going on, so definitely take advantage of that. But yeah, as far as Swiss yen goes, just looking at it just strictly from a technical aspect. Okay, higher highs, higher lows on the daily. I like that. As far as the daily chart goes, my nearest demand zone is all the way down here, so it's still quite a ways away. Okay, and as always, guys, my favorite thing to do, choppy intraday sucks, ball. That's right. My favorite thing to do is, look for that confluence of daily 4-hour. That's, for me personally, that's just where I've had the most success. When I'm following that. It's funny because last year I was going through a little bit of a negative spell before ultimately settling on the EdgeFinder. And mid-year, I'll call it, I started getting I started going kind of against that. I was still following daily 4-hour as far as my favorite confluence to buy and sell in, but I was starting to get into some smaller time frames. In other words, dropping down into the noise, the retail noise. And it's no coincidence that that's when my trading started going downhill. Right? Now, there's some reasons behind that I won't get into, but needless to say, yeah, I started dropping down to the smaller time frames, and it went down. So when I finally realized that, I'm like, oh, screw this. I got to dance with the one that brought you. You got to dance with the one that brought you, right? Had to go back to the daily 4-hour, and that's where everything took off. Because I think I mentioned I had a 65% winning percentage for the fourth quarter last year. And that's all. That's the only thing I did different, was went to the higher time frames. Okay. So it all starts from there. And that's why that's always the first thing I look for and draw a rectangle around it. Orange rectangle, or yellow rectangle rather. So daily down here. Now, why not let's look at this. Would this be a daily? Let's turn my magnet tool back on. Okay. I can't utilize this as a daily because it's already been touched It's already been mitigated. And nothing up here is leaving me with a gap or an inefficiency. Remember, I'm trying to find the inefficiencies in the market. So my nearest inefficiency is this one down here. It's way down. Let's look at this candle just for a second. Yeah, see that one even has, let me zoom in. Did that get touched? Yeah, see right there, that pierced it. So by definition, it's an efficient market. It's an efficient price action. So I do not want to utilize that as a daily. So it's a long ways away is what I'm getting at. Okay. Long ways away. What about 4 hour? Okay, obviously we have the confluence down here because there's a 4 hour hiding in here. It looks like there's one hiding in here as well. And you also got the benefit of having this former resistance point up here. Okay, resistance becoming potential support. So as far as this area here, I'm just going to move the daily out of the way for a second because I'm trying to see, do I have an inefficiency on a 4 hour time frame? And if I zoom in, I don't know that I do. So I don't know that I can utilize this. Yeah. See, this would be the lowest candle, but the candles all over, the wicks all overlap each other. Okay. That's on a 4 hour time frame. That's an efficient, there's efficiency within that. So I can't really utilize a 4 hour as my confluence, which again is where I personally have had my most success, right? Daily 4 hour. So, okay. At this point, I'll go down to a 2 or a 1 hour and see if I find something. Okay. Preferably the 1, but obviously 2 would be in the higher time frame, right? That's the best probability. So nothing. I've just got nothing other than obviously, right here. That would be the first wick on a 2 hour. So for me, if I were trading that, I'd just be setting an alert above it and see if we get any type of, by the time, if and when price rolls around to the zone, then it's just a matter of cross-referencing it with the EdgeFinder to see if we have a buy signal. Okay. Zone below again, this is below the former resistance point. Because again, when you get price to come down, a lot of people will utilize that as a buy signal. Okay. So I could see very easily price dropping, getting a little bounce. When price gets up into this area, what happens? They got to put their stop losses somewhere. They're going to be putting sell orders down here, which is their stop losses, right there in or just slightly above the zone, daily zone. So I would look for a retracement like this for a potential buy. That's the way I would see that. Okay. As always, like we all say, not financial advice, but if that were me doing it, I could see myself doing something like that. Remember, it's all about it's like shooting pool. If you guys have ever played billiards or 9-ball or 8-ball, you always have to look 2, 3, 4 balls ahead and make sure you're positioning yourself accordingly, making sure your cue ball is placed exactly where you want it. That's kind of how trading is. You kind of have to, you got to try to put yourself in the mind of a institution, a hedge fund, big bank, right? And see what they can do to manipulate volume or manipulate liquidity around in order to help them to accumulate their position. So that's what I would, if I were a banker, that's probably what I'd do. Because I know I can't just put my full order in. I got to mess around with liquidity. Okay. And that's that may be a hot topic for some. You get a lot of people saying, "Oh, nonsense. They don't care about our stop losses. We're one measly little peon in the grand scheme of things," right? But it's not about the one, it's about the collection. It's about looking at retail activity, retail habits. Okay. Retail traders typically buy when it's too high, buy after that up move is already formed, and they sell after that big drop has already came, right? Evidenced when you look at a gold and silver chart, because you get a lot of pullbacks only to have price continue up. Right? There's your gold. There's plenty of spots in here where sellers thought that they had found the top, right? Sellers here that lost their behind. Sellers here. This is a weekly chart. Sellers here. I mean, it's pretty easy when you start seeing a day, one or two big red candles to be like, oh, that's it. That's the end. Let's hop aboard and drop this thing down to zero. But only to get turned around and just completely wiped. So that's retail activity for you. So again, it's nice to look at a chart to see what retail is thinking so that you can think like a big bank, an institution, and take the other side of that trade. And it's just nice that we happen to have the retail sentiment in the EdgeFinder. So as one piece. Remember, none of these by themselves are the end all be all. Right? None of them. But when they're all in a collection, or when you look at everything as a collection, it's pretty powerful. It's pretty potent. And I know I've got just a few minutes left, but last thing, consider growing out a mustache. It's funny. When I was in my mid-30s, I used to do a lot of medical transport, pick people up, take them on their appointments. And people would always ask me if I was 23 or if I'm 27. This is when I'm in my early mid-30s. I'm like, no, I'm 30 or whatever. So I got tired of that. And as a result, that's when I grew it out. So I can look a little older, look my age a little more. But anyway, New Zealand CAD and New Zealand dollar. So this is a couple of the other assets that hit my alerts. But, whenever those alerts hit, flip over to the EdgeFinder, and they have both since went to neutral. So I avoid them. Okay, Aussie dollar, that was another one. We're down to a 3. New Zealand CAD down to a 1. New Zealand dollars even deeper. Okay, -3. This is a very dynamic list. It's impossible for us to look at every one of these items individually when we're talking about all the different items and have a good understanding of everything, because this is so dynamic. This stuff changes. It changes several times throughout the day, right? So if you want to get your time back and put your time to something that's more valuable, maybe understanding zones better, understanding liquidity better, understanding how the big banks position themselves, right? Then you definitely got to check out the EdgeFinder. Again, 45% off the rest of the week. And also, guys, I do represent EURAUD Prime. I was working with them for a while. Before I go, I'll just mention that. So yeah, Trader Nick does have a discount, and it's right there with a QR code on the screen, as well as the code itself if you just prefer to go to the site and type it in. But A1T35, where you can get 35% off all of the challenges over here on EURAUD Prime. And again, you can always join their Discord, and then it'll send you over here and you can ask any question that you desire. And if you see me in here, I'll be in here as Tigerberry FX. Drop me a line, tell me a lie, okay? Say hello, and be happy to join you guys. So yeah, last thing I've got, guys, I'll be back on 6:30 in the morning for my own trading stream at Trade Like a Tiger. Just to kind of as the warm-up act to get ready for Trader Nick's stream. Okay, so that's the end of my day. I'm just going to sit on my hands the rest of the day, probably similar to yesterday. I've got an interview here in a couple hours. Not an interview, but I have to do I don't know what you call it, some type of program for a potential spot I'm trying to get. So that's what I'm going to be focused on, guys. Replace the income. With that, guys, have a wonderful day, and we'll be back tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.